To go until the start of cash equities trading, here are your headlines. Jay Powell holds the line on inflation as the Fed chief leads a number of his colleagues in hammering home that the central bank is nowhere near raising rates. China can't cool the commodities market for long. That's the take of the man in charge of the world's biggest commodity trader. We bring you our exclusive conversation with Glencore's CEO, Ivan Glassenberg. Plus, 5 years on from the Brexit referendum, the UK and EU are close to striking a truce in their post-Brexit trade disputes. Good morning, everybody. Welcome back to the second hour of the European Market Open. Let's have a look at where we are on futures then. And futures were starting to look a little more positive as we were just heading towards the start of the European equity trading day. And you do see FTSE futures a little on the back foot. In fact, we're fairly flat really across these European equity market futures, aren't we? US futures have been positive through much of the last few hours. Not as positive as they were maybe, but still in positive territory, up by around 2 or 0.3% on US equity market futures. Let's have a look at where we are opening then on European equity markets as we just get into our trading session here in Europe. And the FTSE 100 up by 0.8%, waiting for other markets to open as we continue to look at, we've had a few individual stock stories that could be of interest. Pernod Ricard, of course, giving some guidance to the markets, Barclay Group in the house building sector. We talked about those, Bank of Ireland as well, as the government commits to selling, pretty slowly, but selling down its stake in that business. So lots to focus on at the individual stock level. In terms of the big picture, we are flat to positive, really. The CAC 40 up by 0.1%, the DAX up by 0.25%, the IBEX up by around 0.3%. So making modest gains across these European equity markets right now. All of that happening after the Fed Chair, Jay Powell, reiterated his soothing message to markets yesterday.
We will not raise interest rates preemptively because we think employment is too high, because we fear the possible onset of inflation. Instead, we will wait for actual evidence of actual inflation or other imbalances. A pretty substantial part, or perhaps all, of the overshoot in inflation comes from categories that are directly affected by the reopening of the economy. I will say that these effects have been larger than we expected, and they may turn out to be more persistent than we've expected. But the incoming data are very much consistent with the view that these are factors that will wane over time.
Joining us now, Chris Wiley from Connor Broadley Wealth Management, where he's the CIO, to give us his thoughts post the Fed and post the Powell testimony yesterday. Then, Chris, very good morning to you. Thanks for joining us. We were having an interesting conversation last hour about how you characterize what we've heard from the Fed over the last week and how markets have reacted. Would you suggest this is just the Fed turning slightly less dovish as opposed to becoming more hawkish? I mean, what narrative would you give to what we've heard from the Fed?
Well, I think the facts have changed and the Fed has changed its mind very slightly. I'm not sure it even qualifies as changing their mind. It's more a matter of just sort of a slight tack in terms of the direction. But this, I think, is one of the problems with forward guidance, which has been a Fed tool now for a number of years. And it does, I think, lead investors to become a bit over-dependent on what the Fed is saying and to stop thinking for themselves. So what's happened in the last 6 to 9 months is a very good news story, as Jay Powell was pointing out yesterday. The recovery has been much swifter, much stronger than anyone dared to imagine. And as a consequence of that, we have seen inflation rise and real growth rise. So let's take a look at those numbers at the moment. Right now, spot inflation is 5% in the US. Now, nobody expects it to stay there, transitory, etc. But that's where we are right now. And the bigger question is where we settle back down to, but maybe we'll come back to that. But let's take that 5% now. Current annualized growth at 10%. Add the two, that gives you nominal growth of 15% right now. And interest rates at 0. So that's a -5 real rates with 15% nominal growth. That's unsustainable. So it's not surprising the Fed has slightly adjusted its stance.
Not surprising. And let's think about then where inflation does settle back down to, Chris. I was looking at some, there's a lot of people focused on the supply disruptions that maybe in the short term are driving some of the inflation pressure at least. And I wonder how long lasting that has the potential to become, because just because you get 5% inflation 1 month doesn't mean that it stays around, but perhaps there is something in that 5% inflation that does live on into the future. I was looking at chip lead times, and supply shortages, a supply crunch in the chip sector has been part of that supply chain conversation, and chip lead times have continued to grow, and the recent data I was looking at shows that that's been the case even in the last week or so. So I wonder how much expectation we should have for going back to normal when it comes to supply chain disruption and what that does to inflation.
Yeah, no, absolutely right. And I think, the chip shortage, from what I can see, is going to continue into much later into the year and continuing to cause knock-on effects throughout the supply chain, car manufacturing, etc. Obviously, there are a number of moving parts in all of this. I think the majority of them point to the fact that we're going through the kind of high point of that disruption, and we've got base effects from last year, so we're comparing to a very low base of prices a year ago. All of that's magnifying this move. But what does transitory mean? I mean, it doesn't really tell you anything. All you're saying is this is a high point. But as I mentioned before, what do we settle back down to? And is that? I think we are beginning. Investors are beginning to bifurcate into two camps. One says actually it's right back to where we were in 2019, very subdued inflation, Fed struggling to actually even meet the 2%. Or have we had a regime shift where we've become accustomed to inflation above the target for a while, call it 2 to 3%? And I think that's the really key debate. And I think there are some really, really big, slow-moving forces, but some very powerful forces, which lean into the direction of actually us having a period of more elevated inflation than we've had for quite a while. And at the nexus of all of this is wages and employment markets. And I think they're big social, political, and economic forces leaning in the direction of higher wages. And that's the key, really. That's what changes the prices. And right now we've got them, people trying to tempt people back into work. That's the short term, but the longer term is that I think you've got a rising tide of raises.
Yeah, anecdotally, I hear stories of that kind. You talk about some of the big underlying forces and what they're doing, and some of those have been keeping returns on cash and government securities pretty low. And I wonder if that continues, and if that, in the end, is the big thing that drives appetite for stocks right now, Chris. Are we going to see continued appetite for stocks, despite all the good arguments about valuation and questions raised about whether it continues? Is it a sort of no alternative argument that keeps demand for stocks looking good?
Yeah, I think the no alternative argument is still a very powerful one. And we've got a very, very strong earnings backdrop at the moment. Like everything else we've alluded to, we're probably at a short-term high point, but nevertheless the tide is rising. And the adjustments we've seen so far in bond yields have been actually, pretty small in comparison to that. We've just heard from the Fed again, no surprise. They're not in a rush to raise interest rates. So actually what the Fed is saying to you, they just said it, Jay Powell has just said it right out, clear, there's no hidden agenda here. He said we're going to wait until we see inflation before we raise rates. Now in the old days we used to call that the Fed falling behind the curve. And they've actually just said we are going to let ourselves fall behind the curve. So what that means is shorter rates for longer, but it does mean that further out they will raise rates having fallen behind the curve, and they'll have to do it more aggressively. So that actually tells you that actually means that the steepening of the yield curve reflecting those higher long-term rates, I think, will reassert itself in the coming months after the short-term check, which we've had in the last month or two. And I think it still means that the time being, equities, we should expect a bit more volatility. We can't expect a one-way street, but those earnings yields from equities are still the best return on investment available to you.
Okay. Chris, thanks very much. Stay with us. Chris Riley from Connor Broadley Wealth Management, where he's the CIO. He stays with us longer on this programme. Coming up, we'll be watching out for French PMI data and whether the easing of restrictions in the month of May had an impact. We'll also get PMI data this morning from other parts of Europe as well. So more on the outlook for Europe next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Gas is part of the solution for a longer-term transition.
We give a lot of emphasis in our strategy to natural gas, in particular LNG.
But certainly gas is going to play a really important role.
We need oil and gas to allocate part of the cash to greener energies, to renewables, and to make the transition real.
Carbon price is absolutely essential, but it's also absolutely insufficient.
Carbon pricing is important, but innovation as well, and policies are also very important.
Policy is going to play a very important role.
The majority of governments are taking this very seriously, but it has to be an integrated solution.
We also have to have policy and regulation that mandates things that are not going to be moved by just carbon pricing.
Some of the biggest names in the energy world discussing the transition to green and the role of gas and carbon pricing at the Qatar Economic Forum, an event powered by Bloomberg. And I should let you know that Qatar's Ministry of Commerce and Industry, the investment promotion agency Qatar, and Media City Qatar are underwriters of that event. Let's take a look at what is on the move then this morning. Some of the stocks that we have seen some movement in. Pernod Ricard to the upside, up by 2.8% as they issue new guidance to the market. market. Bank of Ireland Group down by 3.5%. The government of Ireland selling down its stake, giving a timescale to that. It's going to take a while, but selling down some of its remaining stake in Bank of Ireland Group, so that stock retreats. And Phoenix Group, this is the insurance business, Swiss Re has reduced its shareholding in Phoenix Group by selling an about 6.6% stake in this particular business through an accelerated book build process. So as a result of that Swiss Re selling, we see Phoenix shares down by 3%. Let's continue to track the corporate news agenda and get a Bloomberg Business Flash for you. Here's Laura.
Thanks, Anna. Morgan Stanley has told employees they'll need to be vaccinated against COVID-19 to enter its New York offices. CEO James Gorman says about 90% of returned staff have already had their shots. The firm says the goal is to help create a normal office environment without a need for face masks and physical distancing. The UK government is to consult on new rules for on-demand video providers, while streamed content from the BBC is subject to a code overseen by the media watchdog Ofcom. Foreign competitors like Netflix and Disney are not currently subject to regulation. The wait time for semiconductors has hit a record of 18 weeks. Research by Susquehanna Financial Group shows that's up by 7 days from the previous month. The gap is already the most since the firm began tracking data in 2017 and 4 weeks longer than the previous peak in 2018. That's the Bloomberg Business Flash. Anna.
Laura, thank you very much. Laura Wright in London. Chris Wiley, Connor Broadley, Wealth Management CIO, is still with us. Let's turn our attention to Europe. We're just waiting for some data out from the French economy, the PMI data at least, due out in around 30 seconds or so. And I noticed there's a line here from Mario Draghi, the Italian Prime Minister, saying it's fundamental that the EU fiscal stance remains expansionary. Your thoughts then on the amount of support and the type of support that the European economy needs at this point, you know, coming through the crisis, getting up those vaccination levels, but clearly a lag between what happens in the US and what's happening certainly in the Eurozone.
Yeah, no, exactly right. And you know, we are seeing a lag at the moment. But I think the growth rebound is in the pipeline in Europe. And as we know, the European economy is generally more exposed to the sort of cyclical recovery, rather like emerging markets. You know, it's the world's biggest exporting region, and so it is very exposed to global growth. But it is experiencing this lag because domestic demand has been kind of retarded by the slow rollout of vaccines. I mean, what we're hearing yesterday, with Draghi trying to lead the charge, is that they can't take their foot off the pedal at all. We have seen a much more expansionary stance from the Germans. But we need. I think Europe does need more of that, and we'll see whether there's a new consensus which really emerges out of all of this, because that, of course, has always been Europe's disadvantage. That countries like the US in particular, can adjust policy very, very quickly and aggressively. It's much harder in Europe. So I think that's what all this is about. It shows you that we're beginning to move through recovery and anticipation of recovery to managing the recovery and sustaining the recovery, and the levers that need to be thrown to ensure that. Because, of course, the Americans are going to keep at it. What are the Europeans going to do?
Right, and yes, and we've seen, obviously, the politics sometimes gets in the way in the US, but we'll watch with interest and see where that infrastructure spend gets to. Let me just break this French data then as we watch this coming through across the Bloomberg. French June manufacturing PMI, 58.6. The forecast was for 59, so that's not a million miles away. The June services PMI rising to 57.4, the forecast 59.5, of course, and that's below estimates on services. All of these numbers, both of them at least, very much above 50, expansion territory, but I suppose that's not a surprise when you think about the reopening that we've seen in the French economy, and we'll be keeping an eye out for further PMI data coming through. Interesting, Mario Draghi going on to say that faster growth will reduce the debt burden. It's this faster growth that seems is the secret to a lot of things when it comes to Europe, Chris. Where do you find the best investment opportunities then, the best ways to tap into growth in Europe? Is it going to come from green investments, from the recovery fund, from that fiscal push? Is that going to drive higher growth rates that you find investable?
Yeah, well, I totally agree that growth has to be the answer this time around, and that's really because there is no alternative to that. After the great financial crisis, there was austerity. That's what followed, because it was feasible to rein in spending and raise taxes. This time it simply is not. And that's why I think that this so-called reflation trade, and everyone calls it a trade, which tells you what the psychological settings are around that. They think it's a short-term thing. They don't call it a theme or a strategy. But I think actually there's longer-term forces. We need this growth, and we need higher nominal growth, so we need real growth plus a bit more inflation to really start to chip away at this debt mountain. It just has to happen, and that's why we're going to have both monetary policy and fiscal policy pushing in that direction. In terms of opportunities, there are still actually quite a few around the world. When we look at when we value markets, we see Europe and the UK still, good value. And plenty of opportunities to play there, and particularly still on the cyclical side of things. Yes, that some of those strategies have taken a hit in the last week, but haven't run up a long way very quickly. So I think that the trend is still higher in those, and we may see emerging markets start to experience a resurgence again, later in the year. But at the moment, the areas of greatest interest are some of the cyclical sectors, which are much better value within markets, and within the international mix. I think it's more about UK and Europe looking out over the next year in terms of relative performance than the US. But that's not to say you can't, there aren't interesting investments within the US complex through sector bets.
Okay, Chris, thanks very much for your time this morning. Chris Wiley, Connor Broadley, Wealth Management CIO. Chris will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. I'll be heading there at 9 a.m. at the top of the next hour. Coming up on this programme, though, the rush for riches. We take a look at how insiders have used SPACs to boost their fortunes. More on today's Big Take next. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European market open. 22 minutes into our trading session. That's pretty mixed, actually. The DAX and the CAC 40 both under pressure just a little to the upside. The FTSE 100 makes modest gains. Let's talk about SPACs. SPACs and the boom that they've enjoyed since the beginning of the pandemic. Since early 2020, more than 470 blank check firms have gone public, raising more than $150 billion. Today's Big Take story looks at how insiders have raced to push businesses into the public's hands and the range of maneuvers they've employed to boost their fortunes. For more on this SPAC craze and just who's benefiting them from these listings, Bloomberg's finance team leader Tom Metcalf joins us with insights. Tom, really interesting read, this story, but let's go back to the heart of it. What's the state of this SPAC craze at the moment?
Yeah, well, it's been one of the trends that's really sort of, kind of ricocheted through both Wall Street and also Europe. So in some ways, the market might be kind of recalibrating recently, but if you look to 2020 and right through to March, I mean, it was just a frenzy. So, I think in total there's been something like $150 billion raised in this space. And really that's for a product that before 2020, only real sort of finance wonks knew what was going on. So it's exploded. It's making a lot of money, but a lot of money for specific people. And this story by our colleague Heather Pearlblow just kind of dives into a few specific examples and sort of peels back the veil a bit. And what she found is somewhat concerning.
Right, so from the territory of wonks to American footballers and influencers and many others who are trying to get their hand, who are trying to be associated with these SPACs. So dive into one of these examples. You referenced the story and it includes some great examples. Who are these insiders and what are they doing?
Yeah, so the story looks at three. One is the Texan billionaire Tillman Fertitta, who basically is using the SPAC to effectively buy other parts of his empire and sort of benefiting in two ways then, both from selling the SPAC, but also what the SPAC does with his company, which is sort of, built out of the Golden Nugget Las Vegas casino. And then you have a, pure sort of Wall Street master of the universe type, Michael Klein, who, uses his company, gets a cut of fees every time he raises a SPAC. His investment bank is kind of running the show there. And the basic essence of the story is, look, this is, none of this is illegal. This is all very creative, but, is it really in the spirit of things? And should regulators be taking maybe a stronger stance against it?
Yeah, well, with that in mind, what are regulators doing about this?
Well, that's the thing. I think they're probably in catch-up mode at the moment. I mean, this sort of came out of nowhere. And, in the land of regulation, they often operate in years rather than, months or days or anything like that. So, I mean, the SEC says it's taking a close look. It's trying to sort of ensure that disclosures in the various forms are appropriate. But, obviously with sort of, I think, hundreds of deals already done, $150 billion dollars worth of investment already in the space. Some are saying, hey, is this too little, too late?
Okay, Tom, thanks very much. Tom Metcalf, Bloomberg's finance team lead. Thanks for bringing us that story. Thinking about regulation, coming up on Bloomberg, SEC Chair Gary Gensler joins us for his first conversation since taking on the top job at that regulator. That exclusive interview at 2 p.m. London time. SPACs perhaps part of that conversation. 8:26 then here in London. Coming up on this programme, we discuss the threat of the Delta variant and the threat it poses to Europe's recovery with the president of the European Bank for Reconstruction and Development, plus how the bank is supporting businesses during the pandemic and fighting climate change. Certainly the bank made a pledge to use all of its resources to fight COVID-19 in the very short term. So we'll get an update from Odile Renaud-Basso, European Bank for Reconstruction and Development, EBRD president. She joins us next. This is Bloomberg.
delayed 4 more weeks. That's the delay expected to be added to the lifting of all lockdown restrictions in the UK. It had been due to happen on June 21st, but UK Prime Minister Boris Johnson to address the nation later today and to push that date into July. It's all down to a surge in the Delta variant, and government ministers thought to want more people to have their second COVID vaccine before they ease all restrictions. How are markets responding? Well, they're largely taking it in their stride. The FTSE 100 actually gaining ground. Strategists saying that delay largely priced in, that we could see further weakness for travel and leisure and hospitality stocks. The pound falling against the dollar, though Nomura saying this weakness likely to be temporary. In fact, money markets largely bullish on sterling, given the pace at which economic gloom has been lifting here in the UK. Indeed, last week's GDP figures pointed to an economy that is recovering quickly, and later this week we'll get unemployment, inflation and retail sales data that should all further illuminate the economic recovery.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. Half an hour into our European equity trading session, things looking a little more negative than they did. The FTSE flat. Elsewhere, a little bit of weakness coming through. We've got some German data just hitting the Bloomberg. German June manufacturing PMI 64.9. That is above the forecast of 63, but just by a fraction. The German June services PMI rises to 58.1. So unlike the French number, that does seem to have come in higher than forecast, higher than anticipated. So we're getting a sort of a mixed picture if you're looking at the Eurozone and what kind of reaction function we might get in the Euro. The Euro fairly flat this hour, 119.35 as we just digest some more of this PMI picture, if you like, and look for clues about the strength of the European economy. Let's get to the picture around sectors. So we've looked at where we are on the DAX there, and the CAC a little bit under pressure. The FTSE fairly flat. The FTSE is flat because we have some support coming through from the basic resources sector. That sector up by 1.1%, and we saw energy prices overnight through the Asian session into the European earnings, or European time zone rather. We've seen some of those commodities be quite resilient. Energy stocks also getting a boost as you see that sector up by 0.9%. To the downside, some of the more defensives, healthcare, chemicals, consumer products and services moving a little bit lower. Let's get a Bloomberg First Word News update. Here's Laura.
Thanks, Anna. Hong Kong pro-democracy newspaper Apple Daily is to close on Saturday. The paper, owned by jailed media tycoon and activist Jimmy Lai, has faced intense recent pressure from the government. Authorities last week arrested the paper's 3 top editors as 500 police descended on the company's offices. On the 5th anniversary of the Brexit vote, no deal has been reached in the so-called sausage wars, but officials on both sides are sounding increasingly optimistic they will avert a trade war. The UK has asked the EU to extend a grace period on the sale of chilled meats and sausages in Northern Ireland from the rest of the UK. Sources say an extension beyond the end of June looks increasingly likely. Former Citigroup chief economist Catherine Mann is to join the Bank of England as a policymaker from September. With previous roles at the World Bank and the OECD, Mann brings international experience to the Bank of England as it weighs when it can recalibrate its easy monetary stimulus. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Thanks very much. Laura writes here in London. Now, Europe's recovery is well underway, with vaccinations rising and stronger than expected economic data from the southern nations. The bloc's Green Recovery Fund is being rolled out in the form of hefty fiscal stimulus designed to encourage sustainable industry. But the spread of the Delta variant is adding risk. Joining us now is Odile Renaud-Basso, European Bank for Reconstruction and Development President. Odile, very good to speak to you. And I know that you've said that all of your activity in 2020 and now in 2021 has been committed to COVID. We see vaccination rates across many parts of Europe on the rise. What is your expectation for how Europe recovers from here then, when you look at the European economy and the threats it still faces from COVID?
What we see is stronger recovery than expected in a way. And when we look at all our countries of operation, so it's beyond Europe. So we have European countries, but also Central Asia, Northern Africa. Overall, on average, the perspective we have for 2021 are higher than what we expected last autumn. So this is a good sign, and the recovery is gaining strength, in particular in countries where you have a strong manufacturing activity, positive effect for commodities exporters of higher commodity prices, and so forth. Some weaknesses or some uncertainties remain in some areas like tourism, services, and so forth, because they are, of course, much more dependent of the evolution of the pandemic, travel restriction, and so forth. So the picture is better than expected, but there are still uncertainties ahead of us.
You also say, Odile, that you're preparing countries for the post-virus era. What does that preparation look like? I'm curious to know whether that is being shaped, if the future is being shaped to look different to the past or a return to normal.
No, I think we are very much focusing on having a recovery that will be greener, more digital, and with equality of opportunities. And I will insist in particular on the greener dimension, because this will be key in the coming years. To support the recovery, there will be a lot of investment from the countries. Companies will start to invest again, and MDBs, multilateral development institutions, will also support investment in the countries in which we intervene. And what is key moving forward is to be sure that this investment will be targeted to the green transition. That should be done at all levels, public infrastructure, but also private investment. The companies need to adjust to the green transition, to decarbonization, and so forth. So at EBRD, we have set for ourselves a target that 50% of our financing need to be green in 2025. So this is a big increase to be managed in the coming years, and that will be a big focus for us. And the decision that we will take and that we submit to our governors next week is to have all our financing, all our activities fully aligned with the Paris Agreement. So it means all our project financing, but also our own investment of portfolio. And that will be a major step forward.
Yes, I mean, your investment bank, your development investment bank, was set up in the early 90s with an explicit environmental mandate, an explicit requirement to consider the environment, Odile. So I wonder, does that leave your loan book and your exposure to climate change in a good place? Do you feel that relative to others, you either have good practice experience to pass on or less to do? What's your experience there?
No, we have done a lot. We have invested since 2006, 38 billion in green financing. We have to step up this effort because, as I was saying, I think that everybody realized that now that it's important to really tackle very speedily the challenges. So we will continue to step up our effort in this respect, and we will ensure that everything we do is consistent with the objective of reducing carbon emission. What we'll do also is focus on the disclosure. So, as a financial institution, we have financial accounts, we disclose, and we have started to disclose our exposure to climate. And this is a good way to develop a methodology and be able to support the countries in which we intervene to develop such a methodology. Big dimension of our activity will also be to help countries in which we intervene, sometimes which are very dependent on coal, for example, to define long-term strategies on how to transit from coal-dependent economy to greener economy with more renewable in a stable manner and so forth. So there is a lot of work to be done to define this strategy in a way which is compatible with economic growth and which is just, because you may have some regions or some people or some industries much more affected. And so we need to support this transition in all its dimensions.
Odile, does this represent a pivot in the mission of the EBRD, do you think, then? Of course, being set up in the early 90s to help Eastern European countries and others to establish a private sector. Now the focus very much seems to be on green finance. Put those two together for us.
No, I think the EBRD was quite innovative when it was set up with this sustainable and already green agenda. Now it's becoming mainstream. I think all financial institutions, all economic players have to take this dimension into account. And we keep, so it's not new for us, but it's taking a bigger dimension, I would say, but we keep our focus also on the private sector. And I think that's where is a challenge to combine private sector activity and private sector financing with this green agenda. But this challenge is also the solution to tackle climate change, because it will not be addressed, or it cannot be addressed only with public support, public finance, public money. We need to have all actors, all industries, all economic participants to contribute to address this challenge.
Odile, thanks very much for your time. Odile Renaud-Basso, the European Bank for Reconstruction and Development President, speaking to us about green finance, something she's going to be speaking about here in London this week. Coming up on the programme, as vaccine numbers ramp up across the world, airline companies are looking to boost passenger numbers over the summer, of course. We spoke to some of the industry's leading players. We'll bring you those interviews next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think it should happen, because if we compare the European Bank with the American banks or with the Chinese banks, you will find that they are too small to survive by themselves. And I think emerging is important between them. Is it now? Everybody waiting to have a better valuation to think about merging. But I believe to merge now is better because the market is being taken by the big bank, the giant bank in Europe. And if they don't do something quickly in Europe, in European financial, I think they will have difficulties to compete with the American and the Chinese. Already they have difficulties to compete with them, but they will have more difficulties to compete with them.
Do you think that Deutsche Bank, something of which you are a shareholder, do you think Deutsche Bank should merge with another lender?
Well, I am not in the board, so they have to decide, but I'm saying what I think, and I believe that mergers is inevitable.
That was Deutsche Bank's top Qatari shareholder there, signalling his backing for consolidation. Forum powered by Bloomberg, Qatar's Ministry of Commerce and Industry, the investment promotion agency Qatar and Media City Qatar are underwriters of that event. Interesting conversation, interesting thoughts there on the banking sector and the need for M&A within the European banking sector coming to us from that Qatar event. Let us get a Bloomberg Business Flash then, corporate news flow here with Laura Wright.
Thanks, Anna. Pernod Ricard has raised its full-year profit estimate after a stronger-than-expected rebound in demand. The maker of Absolute Vodka and Jameson Irish Whiskey now expects organic profit growth from recurring operations of about 16% this fiscal year, up from a previous forecast of 10%. The French company says store sales remained resilient, while the lifting of lockdowns led to an acceleration in demand from bars and restaurants. Morgan Stanley has told employees they'll need to be vaccinated against COVID-19 in order to enter its New York offices. CEO James Gorman says about 90% of return staff have already had their shots. The firm says the goal is to help create a normal office environment without a need for face masks and physical distancing. The biggest new property on the famous Las Vegas Strip in more than a decade opens tomorrow. Resorts World Las Vegas features 3,500 hotel rooms, a 5,000-seat theater with Celine Dion in residency, and a 100,000-square-foot LED screen on the side of one tower. Construction at the site actually began back in 2007, but was halted by the Great Recession. That's the Bloomberg Business Flash. Anna.
Thanks very much. Laura Wright here in London. Now, with vaccine numbers increasing across the world, airlines are looking to boost passenger numbers for the summer season. But significant barriers remain, including patchwork government rules and the spread of the Delta variant. Bloomberg's Guy Johnson hosted a panel at the Qatar Economic Forum. He spoke with the CEOs of Qatar Airways and Boeing.
Domestic recoveries in these large developed countries are a testament to the effectiveness of our vaccine and the confidence that the flying public has in the vaccine, because they're coming back in a very robust way. I think the folks that are trying to organize the international protocols here have to look hard at that and follow the vaccine. So vaccinated people from all around the world should be able to travel to one another's countries. And I think that is the way it will develop, but we've got to get a little less politics involved and a little more science, because these vaccines are in fact effective.
The sense I'm getting from all of you is that we need to lean on science. The vaccines are the way to reopen travel. We need to make sure that the protocols line up. Why is that not happening, Your Excellency? Why are governments not stepping up? When you talk to governments around the world, when you're talking about trying to make this happen, how much feedback are you getting? How many conversations are you having with government? Because certainly the airlines that I talk to in Europe are finding it really a huge struggle to kind of connect with governments and make the point. Are you struggling with that as well?
All the airlines and the CEOs are in the same boat. We are all struggling with authorities who keep on not making their mind exactly what they want. I do understand, like all of my colleagues mentioned about vaccinating people and allowing people who are vaccinated to travel freely. But the problem is, until you really get the masses vaccinated, you will keep on getting mutations and the mutations will then keep getting waves of the third wave or fourth wave or fifth wave. And this continuously happening will let the governments again to tighten their belts. The example is the United Kingdom. Prime Minister Boris Johnson mentioned that he was going to open up on the 17th of June. Now it is 18th of July. And this could again extend once they see the Delta variant increasing in the United Kingdom, and so are in other countries. But the problem is that until the biggest markets in the world don't open up, Brazil, China, India, we will keep on having a depression in the long-haul travel. And for us, yes, big countries like United States and China and India can open up their domestic markets. But when you have a hub and spoke operation and you want people to travel long haul, it has to be a consistent protocol of how you will treat the vaccinated people and how you'll open up the countries and the markets.
Dave Calhoun, another way of looking at this is that this is protectionism. Is that the correct way of perceiving what is going on?
Yeah, I probably wouldn't use that word. I think it's fear and the lack of information. Look, political interests, government interests, they're looking at the flying public and they're having a trust discussion with them. And they want to ensure that they don't step over the line on that subject. And so they're a little fearful of making the right decision. So I think Akbar's comments are perfectly accurate. The penetration of vaccines around the world is going to take time. It may not be until the end of next year before we get enough penetration broadly to accept vaccines and it has a meaningful impact on intercontinental traffic.
Really interesting thoughts there about the return to the skies, the return of the aviation industry through the pandemic and the need to vaccinate and vaccinate. That all coming from the Qatar Economic Forum. You saw Qatar Airways and the Boeing company being represented there. You also saw the CEO of IAG and the CEO of Rwandair speaking in that broader panel conversation. But we just chose that little bit to show you on the importance of vaccination. That was clearly one of the big talking points. Coming up on this program, though, cooling commodities. We'll discuss how much Beijing can rein in rising prices in the sector, as well as the implications for inflation. That's next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European market open this Wednesday morning, 52 minutes into our trading session. The FTSE 100 holding pretty much firm at the flat line. Elsewhere, we see some losses coming through. Now, what supports the FTSE 100 is basic resource stocks this morning. And let's talk about commodity markets with Eddie van der Velde from our Markets Live team, who is with us this morning. Eddie, very nice to see you. So the FTSE 100 getting some support from some firmer commodities prices, which we've seen overnight. And it's interesting to think about or get your views on these, the comments from Ivan Glassenberg at Glencore. He was saying there are limits to the extent that China can calm commodity prices. We've seen them trying to do that, though, in recent weeks.
Yeah, I think so. I think, China is very eager to get commodities at a lower price, which is not overly surprising given that China is the biggest buyer of many of these commodities. So, the buyer wants lower prices. Sure, is the buyer going to get it? We shall see. Now, China has tried to push prices lower by some state sales, but really the state sales have been a little bit disappointing so far. We saw some of the numbers come out yesterday, and they were not spectacular. Quite a small amount of copper, quite a small amount of. So I think China realizes that if they flood the market right now, everybody will realize they haven't got any powder left. So this just shows that when commodity prices start going up, when there is a commodity super cycle, there's very little that can stand in its way, even the biggest buyer.
Right, so there's high demand for some of these commodities right now. China's trying to do something about the supply by releasing some of the stockpiles, some of the state stockpiles. And you mentioned copper, and that's one of the metals they've been doing that with. So what is the outlook for copper then, Eddie?
Look, the outlook for copper has really shifted a lot since we've had the global pandemic. I think what has happened is there's been a speed up in the shift to electric vehicles. People are, purchasing more electric vehicles, and governments are planning their fiscal stimulus around electric vehicles, infrastructure, and electricity supply. And all of those things use so much more copper than they did previously. So the case for copper is extremely bullish. And the big factor is we have been looking for copper. We've been exploring for copper for centuries, right? We're unlikely to stumble on a big source of supply, unlike for things like lithium and so on. And that makes the case for copper extremely bullish, particularly on the EV story.
Okay, well, how does that all tie into inflation then? Because commodities prices, talk of a super cycle in commodities, clearly that aligns nicely with a market that is increasingly watching inflation tick higher and asking itself just how transitory this is going to be. Do the supply and demand dynamics around commodities tell us anything about the transitory nature or otherwise of inflation?
Right, and commodity prices have come back a little bit over the last few days, and since the Fed has been talking about a more hawkish stance that probably increases or reduces the inflationary pressure somewhat, and that's fed through to commodities. But these are long-term stories, and if you compare where prices of copper, where prices of lumber, where prices of oil are compared with a year ago and even 2 years ago, right? Copper is at $9,000. It was sitting below 5,000 not very long ago. Oil at 75. These things are inflationary and they are not transitory. These factors, they are here with us to stay.
Okay.
So, I think it's very difficult for the Fed.
Okay, something to keep in mind then, Eddie. Thank you very much for your thoughts. Eddie van der Velde from our Markets Live team. I should also tell you that euro dollar fairly flat at the top line, 119.36. Recovered a little bit, though, from its earlier losses on the back of some decent data out of Germany in particular. German and French services booming. The factory squeeze maybe easing slightly. So all of that fairly supportive for the European currency. That is it for the European equity markets. European equity markets not being supported all that well today. Surveillance Early Edition is next. This is Bloomberg.
it's very hard to say what the timing of that will be. When will these bottlenecks disappear? Prices have come way down, but they're still pretty high.
Pure underlying demand supply fundamentals are putting commodity prices to the levels where they are.
The penetration of vaccines around the world is going to take time, and it has a meaningful impact on intercontinental traffic.
Business travel will certainly come back because businessmen, they like to face people, they like to feel people, they like to have to notice the body language.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the Early Edition on this Wednesday, the 23rd of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Jay Powell holds the line on inflation as the Fed chief leads a number of his colleagues in hammering home that the central bank is nowhere near raising rates. China can't fight the law of supply and demand. We'll bring an exclusive interview with the Glencore chief executive, Ivan Glassenberg, as the commodities market continues to surge. And on the 5th anniversary of the Brexit vote, the UK and the EU are close to reaching a truce in their post-Brexit trade dispute. So quite a lot going on today, actually, but we start with our top market story. Jay Powell saying that while a debate on tapering may be in the cards, the Fed is nowhere near raising rates. Now, testifying before a House committee, the chair also admitted that price spikes have been bigger than expected, but reiterated that his view that inflationary pressure will abate.
We will not raise interest rates preemptively because we think employment is too high, because we fear the possible onset of inflation. Instead, we will wait for actual evidence of actual inflation or other imbalances. A pretty substantial part, or perhaps all, of the overshoot in inflation comes from categories that are directly affected by the reopening of the economy. I will say that these effects have been larger than we expected. And they may turn out to be more persistent than we've expected. But the incoming data are very much consistent with the view that these are factors that will wane over time.
Let's get more now with our Danny Berger. You can also catch Danny also at 5 a.m. London time going through the markets. So, Danny, first of all, what was the reaction from the markets on Powell's testimony? We didn't really learn anything we didn't know.
Yeah, exactly. And I mean, both at 5 a.m. this morning and now, it's almost like we didn't even need to be awake during the past week. We have had a round trip here. We're looking at a U.S. 10-year yield that's around that pivot point of 147, which is really where we started before that FOMC reaction. I mean, all this turmoil in the middle, hearing from Powell that more dovish tone, which we also knew he would take because of his prepared remarks, really soothed markets, be it in the 10-year or even equities when you saw the NASDAQ hit a new record. Tom Porcelli, though, over at RBC, saying that his testimony was really political. Tom clearly wasn't impressed, saying that that's an hour of his life he'll never get back. I mean, being really, really harsh here. But he did point to what Loretta Mester said yesterday as one of the more important things we heard from a Fed speak, saying that non-conventional monetary policy has the potential to increase risk to financial stability, instability rather. So kind of flagging that, hey, there are distortions that can be caused by what we're doing over here. So the question arising, maybe the Fed is also trying to talk some of the froth off the market.
Yeah, I always like snarky remarks, Danny, but I also always have time for Jay Powell. Away from the Fed, Bitcoin been whipsawed in the past 2 sessions.
Yeah, definitely. I mean, if we're talking about froth, maybe that is necessary. We talk about Bitcoin. Yesterday, falling 10% from the open and then rallying 10% again. That's actually the 5th time this year that has happened. It is a more volatile year when it comes to Bitcoin. That happened 2 times last year, 3 times in 2018. So this really isn't necessarily the norm, even though we know it's really volatile. This may have started with China, but this is a very momentum-driven asset. So if they're selling, people tend to sell into it. If there's a price rise, people tend to buy into it. At the moment, we're back above $34,000, but it just goes to show that we can expect a lot of volatility this year when it comes to the crypto space.
Danny, thanks so much, Danny Berger there. And of course, we saw maybe that next support at 20,000. Now, coming up, Ivan Glassenberg gives us his views on China's efforts to cool the commodities markets. We hear exclusively from our interview, the Glencore chief executive at the Qatar Economic Forum. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on, take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the head of the world's biggest commodity trader, Glencore, says Beijing efforts to cool commodity markets just won't last long. Ivan Glassenberg, who's headed the miner for 7 years now, spoke to me exclusively as part of the Qatar Economic Forum. Now, after an almost 40-year career at Glencore, he rose from a coal trader to chief executive. Glassenberg now plans to step down from that role at the end of June. So in what may be one of his last interviews in the chief executive role, we delved into the reasons behind the recent run-up in commodity prices.
Got the big infrastructure spend, which is occurring in China at the moment. It started early when the COVID crisis hit and the Chinese got out of the problems. They started spending on infrastructure and pushing the infrastructure fiscal spending, and that started the rise of commodity prices. You also had a few disruptions around the world in certain commodities because of the COVID, and that tightened up supply, and that allowed the commodities to push up to where they are today. You also have infrastructure in picking up in various parts of the world, but we do see it coming in the United States when eventually they pass the infrastructure bill, and the speculation of commodity prices picking up on the back of that will start driving them up. So I think the pure underlying demand-supply fundamentals are putting commodity prices to the levels where they are. I know recently the Chinese have tried to push it down to bring it back to lower levels. I think that's a short-term game because the underlying fundamentals will keep it at these levels.
So how much can they actually try and talk it down, China?
Well, they're not trying to talk it down. They're taking some material from the strategic stockpiles and putting that in the market. Now, how big the stockpiles are, we don't know exactly, but they can do it for a while, but eventually they got to restock the strategic stockpile. They can't keep it at these low levels, so they'll come back into the market. So I think it's a short-term phase.
Short-term, like a couple of months? Are we actually at the start of some kind of super cycle, but a super cycle that's very different from last time around?
Yeah, well, what was long? We've had two sort of super cycles, you can say. In 2002, we had the Chinese coming into the market where you had the big push on commodities. The world wasn't ready for that amount of demand, and you had commodity prices rise considerably. Then the world sort of caught up a bit, but then you had the 2008 financial crisis, pushed down commodity prices. Chinese came in big with infrastructure spend in 2009. That kept it strong. Unfortunately, then the mining industry got the usual situation where they started producing too much, increased production, opened up new mines, and started producing more. That pushed it down, and you had the 2015 commodity price drop. Now it started looking better until COVID. COVID pushed it down, as we said, and now we got the rise with the infrastructure spending occurring in many places around the world. Is this a super cycle? I don't know if you want to call it a super cycle, but I do believe commodity prices will stay strong for a long while longer. And I think when the American infrastructure plan comes into fruition and the actual shovel-ready, how many shovel-ready projects they have, I don't know, but let's assume it will take them 18 months to get going. You will push a commodity price will stay high for a long time. You will have both parts of the world pushing infrastructure. You'll have the Chinese continuing with their infrastructure plan. They still got to urbanize a few 100 million people, and you have United States kicking in, upgrading their infrastructure. Demand for commodities will stay for a long time. Can supply meet that demand? Well, that's another debate. How quick the mining industry can increase and bring new projects on, but that's a lengthy debate. New projects, I think, are going to take longer this time around. There aren't many projects around the world. We've developed most of the easy projects. We now got to go into the more difficult regions of the world where there isn't infrastructure, harder political environment, and I think the mining industry is not ready to add massive new tons to the market. But with the new green energy, besides the infrastructure and all the green energy demand that we'll talk about later, I believe the mining industry is going to struggle to keep pace.
So, Ivan, is a surge, for example, in coal prices, which currently are at around a 10-year high, a warning sign what could happen, for example, in oil and gas with the energy transition now that companies just aren't investing enough, which goes to what you're saying?
Yeah, that's clearly. You've seen, I think, thermal coal is leading, is a perfect example. The world has said we want to reduce the amount of thermal coal production. Mining companies definitely are not investing in more thermal coal mines. A lot of the mining companies are even getting rid of their thermal coal mines. We ourselves, we said we will run down our thermal coal mines over time, and we said we will follow the Paris Agreement, whereby we'll reduce by 2035. We're talking about 40% there, and by 2050, we will run down most of our coal mines. So what you are having is supply being disrupted, no new supply coming into the thermal coal market. However, demand is still there. Now we can talk about the green energy and how we're going to switch from fossil fuels to renewables and how quick we can do that. But right now there are coal-fired stations around the world, especially in Asia, which continue. There are still new coal-fired stations being built around the world, as much as we don't want that to happen. But the developing countries, coal is still the cheapest form of energy, electricity supply, and these coal-fired stations will continue. But if you are cutting supply and seaborne market is about 950 million tons, and you reduce that, and that continues reducing, you will have coal at these high levels. And today you have Australian coal at $130, South African coal at $120. That's what happens when you cut supply and you haven't found a solution for demand. I think in your previous panel, I was listening there, that's the situation. Cut fossil fuels, that's fine, but we've got to make sure renewables can fill that space and we don't have a gap. And if a gap is going to be there, you're going to have higher commodity prices.
Well, that was part of my conversation with the Glencore Chief Executive, Ivan Glassenberg, at the Qatar Economic Forum. Now, stay tuned. Up next, Ivan and I discuss the mining industry's role in the green transition and how the move to renewable energy is also likely to disrupt the market. That's coming up next, and this is Bloomberg.
G7 today need to wake up and listen to the science. There isn't room for discussion on this. Scientific inevitability, and they need to act. They don't need to talk anymore. They need to just act.
climate change has been on the agenda of the G7 since maybe 2003. So we need to see action, not just talk. And we've only got 9 years left to halve carbon emissions if we're going to stop dangerous climate change happening.
United, we'll never be defeated. The world is possible.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the mining industry is responsible for up to 7% of greenhouse gas emissions globally. While nations push to lower their emissions, a switch to renewable energy will actually require vast amounts of metals. Iron for steel, copper for wiring, and cobalt for electric vehicles will be crucial to reach net zero targets. But how does the mining industry up production while lowering its carbon footprint? Well, Ivan Glassenberg and I discussed the tough road to green energy at the Qatar Economic Forum.
The energy transition, we today what? We got to substitute fossil fuels, whether we're talking about coal, oil, gas, and we've got to reduce that by the year 2050. And we're talking about replacing, that supplies 80% of the world's energy demand today. So, you know, if you got to do that, we still got to grow the amount of energy. By 2050, you've got to produce 2.5 times more energy the world's going to need. You still have about 800 million people in the world who still don't have electricity. We've got to supply them electricity. You still have about 2.6 billion people in the world that still don't have clean cooking. So a lot of new energy has to be supplied to the world. Now, if we're going to take that renewable, today the world produces around about 3,000 gigawatts of renewable energy. We got to take that up by the year 2050 to 26,500 gigawatts of energy, renewable. What does that mean? We got to produce 20 times the amount of solar energy that we're producing today, 11 times the amount of wind turbines, and we talk about electric vehicles. We say we want to produce by the year 2030 to follow this energy transition, around about 55 million vehicles per year being produced. Today, what are we? That's 18 times the amount of electric vehicles we're producing.
But Ivan, are you telling me that that's almost impossible that we achieve those targets, or you're saying, you know, we can achieve them if we do this today, but it will be difficult?
I don't know if we can achieve them. Can we switch over to that amount of wind and solar in that amount of time? I don't know. But let's assume we can, and we can fill the gap of fossil fuels with this wind and solar. The question is, do we have the metals to supply it? To give you an example, copper today, we produce, the world consumes 30 million tons of copper. By the year 2050, following this trajectory, we've got to produce 60 million tons of copper per year. Now, if you look at that, that means we got to grow and increase copper supply by 1 million tons per year. If you look at historical past 10 years, we've only increased 500,000 tons per year. Do we have the projects to add 1 million tons of copper per year? I don't think so. I think that's going to be extremely difficult. Take the same if you take nickel. Today we produce 2.5 million tons of nickel. We've got to grow to 9.2 million tons of nickel. We've got to produce an extra 250,000 tons of nickel per year. We've only been growing at about 100,000 tons of nickel. Same goes for cobalt.
But so if we're not able to actually meet the forecast, what does the industry do about it? Is there anything that they can do now to make sure that they grow at least at a pace which is adequate to keep up with some of the things that you're talking about?
Look, the mining industry is going to look at it intensely. We do see the Chinese who are focusing on this, and we see them trying to increase production in these various commodities. They who were fast to see this, and they've been looking at this over the last 10 years at least. We've seen the Chinese have been increasing nickel production in Indonesia rampantly. We see nickel pig iron in Indonesia. I think today they're producing around about 800,000 tons. That comes from a very low level. So that there, the Chinese have seen it. We see it in the DRC. If we talk copper and cobalt, the Chinese are pushing copper and cobalt production in the DRC. And I think they're seeing it. Us, the mining industry, we're trying to grow and we're trying to increase projects. But as I said earlier, projects are in the more difficult regions, not the easy projects. Naturally, the world does the easy projects first, the difficult ones later. We're in that stage now in the difficult projects. We're going to countries with lack of infrastructure. We're going to new countries in a difficult political environment, not so easy. So I think the world's going to struggle to catch up. And that's where it's going to be the thing. What we're doing is we want to say we want to cut the supply of fossil fuels, and we must find the solution. And that's going to be you cutting it, but we don't have the solution yet. So you've got to try and get the two to balance. Can we do it? That's going to be the test.
Okay, whose job is it to do it? So is it private companies? Is it public companies? Is it governments? Is it someone else?
I think it's a mixture of everyone, yeah. I mean, I think it's got to be governments. If governments say we've got to have green energy and we've got to move towards green energy and we've got to get rid of fossil fuels, who's going to supply it? Can private industry do it? And private industry, of course, will push because we know that's going to create higher commodity prices. That's what we want, and we're going to try grow. But provided we, the demand is there, the demand will be there. But do we have the projects to do it? If we don't, then yes, like China, the government is pushing their companies to grow supply. We see it. We're going to see it in iron ore shortly. You have Guinea, where the Chinese are pushing, their companies to go produce more iron ore in Guinea. So it's going to be a push from governments to make sure that their private industries, their private companies are investing and growing the supply of these important commodities for the new green energy future. Electric vehicles, you're going to have to produce a lot more nickel, a lot more cobalt, a lot more copper. Can we get it if we are going to total electric vehicles? And as I said, by 2030, we're talking 55 million electric vehicles a year. That's a lot of copper, nickel, and cobalt we're going to have to produce. Can we get it forward? And it's going to be a concerted effort, I think, of both government and private industry.
Evan, you're considered one of the fiercest chief executives of this generation.
Really?
So as you're about to step down, what's been the biggest mistake in your career, apart from not giving enough TV interviews?
Look, we all make mistakes. There's certain investments that haven't turned out as we would have liked them, but that's life. We live with that. I think the most important thing that I've tried to do in the industry is to ensure that we don't oversupply the industry, and we try to do that here at Glencore. Reduce supply when we felt the market didn't need it. But yeah, we've had some problematic assets around the world, difficult regions we've operated in. Some didn't turn out great. So I think like any CEO, you got some bad projects didn't turn out. But overall, I think it turned out great. I think the company's done great. We have a great set of commodities, and we're very fortunate that we got the right set of commodities for exactly what we've been talking about. We got the commodities that feed this new green energy. We have cobalt, we have copper, we have nickel, we have zinc. These are the important commodities for the new energy future. So that's what we are pretty happy about here at Glencore.
That was our exclusive conversation with Ivan Glassenberg at the Qatar Economic Forum. After almost 40 years at the world's largest commodity traders, he's actually stepping down as chief executive at the end of June. Now, you don't want to miss more from the QEF. Today, we'll hear from names like Axel Weber, Larry Fink, and Hillary Clinton. Now, this is what the markets are doing. Now, a lot of the focus, of course, is on inflation and what we heard from the Fed, but there were no real surprises from Jay Powell yesterday. So stocks are pretty much steady. I have to say the focus will maybe shift to some of the inflation figures that we get in other parts of the world. Again, oil actually climbing above $73 a barrel after we had data signaling another decline in U.S. crude stockpiles, and that's added to a bullish outlook. Some of the other things we're watching, of course, is Bitcoin. Now, cryptocurrency is one of the biggest swings that we saw in the last 8 days. Bitcoin rebounding, rising currently past $30,000, and then commodities, including copper and iron ore, climb. This was our big conversation with Ivan Glassenberg of Glencore. The currencies, for example, that, of course, the currencies of Australia and New Zealand retreated as the country stepped up coronavirus curve. So these idiosyncratic stories out there actually moving the markets in parts. Now, Mario Draghi is confident that part of the EU recovery fund will become permanent. The EU says leaders are expected to give final approval to Italy's aid package in about 4 weeks. Now, up next, we discuss this and more with the former Italian Economic Development Minister and Illimity Chief Executive. He's Corrado Passera. If you have any questions for him, IB plus TV Go. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Jay Powell holds the line on inflation as the Fed chief leads a number of his colleagues in hammering home that the central bank is nowhere near raising rates. The Glencore chief executive, Ivan Glassenberg, speaks to us exclusively. He says China can't fight the law of supply and demand. Commodities continue to surge. And on the 5th anniversary of the Brexit vote, the UK and the EU are close to reaching a truce in their post-Brexit trade dispute. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first, let's get straight to the markets with our Danny Berger. Danny, a lot of the things are moving, but actually not really on the back of what Jay Powell was saying or doing.
Yeah, exactly. I mean, it was more sort of like as a tonic to markets that allowed them to continue to chart the path that they were before last week's FOMC meeting. Now, of course, while markets might be a little calm on the surface, I do want to take you what's happening underneath because we have some notable movers. Pernod Ricard being one of them, the top mover in the stock 600, upgrading their earnings. Jeffrey's saying that they're having the best of both worlds. You have bars reopening, so people are going in there drinking, but that drink from home trend, well, you know, maybe not great for people's health, is continuing really strong. So that means their sales are really good. Bank of Ireland, the biggest loser today, down 6%. The Irish government starting to sell its stake. This was a bailout that nearly bankrupted the country. So they're trying to unwind this position that they've had on the balance sheet for some time. So those shares moving lower. And finally, Kering, there was a note out from HSBC this morning downgrading not just Kering, but really the entirety of the luxury space, saying that they like luxury, but it kind of looks as good as it's going to get. You know, people are certainly buying handbags, but these are just priced so richly that you shouldn't be adding now to your exposure.
Okay, that's interesting. I wonder whether you add to your drinks exposure. Drinking from home, Danny, that's not us at all. Morgan Stanley, the second Wall Street firm now requiring a vaccine for employees to come back to the office.
Yeah, and this is really interesting. And Francine, I know that this is something that, you know, you and the rest of the surveillance team have been trying to figure out, like, what's the legality of this? We certainly know that there are places in New York, and that's where this is happening. Morgan Stanley's office is in New York. For example, different venues saying, okay, you either need a negative COVID test or a vaccine to come in, to go to concerts, that sort of thing. To really figure this out, I had to go back to December, where we had the Federal Equal Employment Opportunity Commission give a ruling. And so they're the ones who say, okay, you can't test employees for certain things. You can't really dig into certain medical histories. That's not allowed. But they basically said that, look, requiring a COVID vaccine doesn't have anything to do with medical history. Therefore, it's allowed. So it does seem like the trend is towards allowing this sort of thing to happen, Francine.
Yeah, I love this story. I mean, it's really important. We'll see if it catches up with more Wall Street banks. And I haven't really heard of a precedent in Italy or, you know, France. So we'll see what happens there. Danny, thanks so much. Danny Berger there with all the main stock movers. Now, joining us is Corrado Passera. He's Illimity Chief Executive and Founder. Illimity is an Italian challenger bank that operates digitally. Now, the lender has just approved its strategic plan. It sees a net profit of between 60 to 70 million euros this year. Before founding Illimity, Corrado was Italy's economic development minister between 2011 and 2013. Now, before that, he was also the chief executive of Italy's biggest bank, Intesa Sanpaolo. That was from 2007 and 2011. Corrado Passera. Welcome to Bloomberg. Thank you so much for joining us. I have a lot of questions on the economy in Italy. I have a lot of questions about Illimity and, of course, some of the loans that you're seeing out there. But first of all, if we start with Illimity, there are rumors that certain partners or certain other entities are interested in buying a stake in Illimity. Can you give us a snapshot of actually what kind of conversations you're having?
Yes, and thank you for inviting me, Francine. Yes, technology will be the main competitive weapon in this in the next few years, and the partnerships we have decided to create with the Ion Group has to be put in this context. We are already very well ahead of the market, but we see such a disruptive further change around the corner that partnerships in technology are crucial. And we share the same view with Andrea Pignataro. In our business plan we presented yesterday, all the benefits coming from these partnership are not yet embedded in the plan.
I mean, is there an agreement that actually they won't exceed 10% of Illimity?
No, we are at 10% is a good signal. We have aligned our interest. He's very interested in what we're doing. He's very interested in our platform because actually we created a platform from scratch that is unique. We are probably the only bank with a fully digital, fully modular, fully in cloud platform, very scalable, very capable to integrate innovation, and they decided to license it, to get it in licensing in order to sell it to the market. So we already have a very strong relationship, but the kind of synergies we expect in terms of sophisticated analytics, in terms of software development, are really huge.
Corrado, give me a sense of how much M&A you're expecting actually amongst Italian banks. And I know, for example, so Ion is interested in Served. Would you be interested in taking parts of Served, you know, the asset management or something like that? Or are you expecting consolidation?
There is nothing specifically on the table, but for sure, a number of the IONS Group activity are very synergetic with our activity, and we will concentrate our M&A activity only in very selected kind of businesses. We don't want to expand. We don't want to mix our activities with.
I think we've just lost Corrado. I don't know whether it's a temporary thing. This is a very 2021 problem sometimes when the video freezes. I think we could get Corrado back, but actually we'll try a little bit later. Corrado Passera there, the Illimity Chief Executive and Founder. Coming up, New York's mayoral primaries continues as Eric Adams leads the Democratic nomination. Precincts are still coming in. We'll have the latest next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get back to Corrado Passera, Illimity Chief Executive and Founder. Corrado, we were talking a little bit about the health of Italian banks. I want to get back to Illimity, but actually, I guess the big elephant in the room is what will happen to Monte Paschi, and until that is fixed, is there a discount from investors on the Italian banking system? So what's the perfect solution for it, and what are you expecting the new UniCredit Chief Executive to do about it?
Obviously, I cannot give advice publicly to Andrea Orcel, but there are a number of possible solutions for Monte Paschi, and I'm sure that one of these solutions will be chosen. As UniCredit is not the only possible thing, and so I expect one route to be chosen by the end of the year.
Corrado, talk to me a little bit about how loans are doing in Italy. And, you know, how's it going at Illimity? Do you feel like the pandemic, you know, put you set back, but now you're going full steam ahead? Or what are the main pitfalls in the next 7 to 8 months?
No, I see a very strong will to recover, to restart. And I see also the demand for lending growing. So that is a very good sign, because especially in the SME world, there is a huge underserved market that is waiting for banks or other intermediaries to provide funds for growth, to provide lending for restructuring. We expect almost 40 billion worth of UTPs in the next few years. So there is a real will to start again. I mean, if we reach the 10% ROE already this year and we want to double it by the end of the business plan, it's because lending to SMEs, especially second-tier SMEs with good potential, and restructuring SMEs is a crucial and very rapidly growing market.
Corrado, what would you say to people that are fully invested in Bitcoin?
I would say that as far as cryptocurrencies as a means of payment of system, I have no problem with blockchain. As long as they are made less energy consuming and more compliant with anti-money laundering regulation, it's okay with me. More innovation, more competition is okay. I have no problem with the cryptocurrencies as far as we consider them virtual investment assets. If investors are properly informed, why not? I mean, they have to be free to invest also in tulip bulbs if they want. I see real problems if we want to transform cryptocurrencies in stable coins and in legal money. There is a matter of sovereignty. There is a matter of monetary policy and economic policy. And I'm sure that no serious country, no great power would leave its economic powers to a tech company or a permissionless mechanism. So in that respect, we have to be careful. The digital euro is another story.
We'll have to get you back on to talk about that, Corrado. Thank you so much, Corrado Passera, there, Illimity Chief Executive and Founder. Now, New York's mayoral primaries continues as ex-police captain Eric Adams leads the Democratic nomination. Adams has about 31% of the vote, with most precincts already counted. Curtis Sliwa, founder of the Guardian Angels, has already secured the Republican ticket. Well, joining us now is Bloomberg's DC morning editor, Kathleen Hunter. So good morning, Kathleen. What do we know so far?
Well, you know, it's important to remember that in any New York City primary, really that is more significant even than the general election. So this Democratic primary is very significant. And the fact that Eric Adams is leading by such a pretty big margin, about 9 points right now, means that he could be close to clinching the nomination. Obviously, there's a lot of votes that still need to be counted. There might be more rounds of voting, but it's certainly a good sign for him.
All right, Kathleen, we'll follow, of course, this very closely. I know that also the fourth runner-up so far has actually left the race. Or Kathleen Hunter, there, Bloomberg's D.C. morning editor. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gehrens. Hi, Leanne.
Hi, Francine. Hong Kong pro-democracy newspaper Apple Daily is to publish its last print edition tomorrow. The paper, owned by jailed media tycoon and activist Jimmy Lai, has faced intense recent pressure from the government. Authorities last week arrested the paper's 3 top editors as 500 police descended on the company's offices. Now, Sydney is to impose new restrictions, including compulsory mask wearing at indoor venues as an outbreak of the Delta variant spreads in the region. The US, meanwhile, looks set to miss President Joe Biden's vaccination target. The White House says it will narrowly fail to get 70% of adults a first shot by the 4th of July holiday. Morgan Stanley has told employees they will need to be vaccinated against COVID-19 to enter its New York offices. CEO James Gorman says about 90% of returned staff have already had their shot. The firm says the goal is to help create a normal office environment without a need for face masks and physical distancing. The biggest new property on the famous Las Vegas Strip in more than a decade opens up tomorrow. Resorts World Las Vegas features 3,500 hotel rooms. Wait for it, a 5,000-seat theater with Celine Dion in residency and a 100,000-square-foot LED screen on the side of one of its towers. Construction at the site began all the way back in 2007, but was halted by the Great Recession. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, on the 5th anniversary of the Brexit vote, no deal has been reached in the so-called sausage wars, but officials on both sides are sounding increasingly optimistic that they will avert a trade war. The UK has asked the EU to extend a grace period on the sale of chilled meats and sausages in Northern Ireland from the rest of the UK. Well, joining us now with more is Bloomberg's Europe correspondent at large, Alberto Nardelli, who also breaks news on a really hourly basis. Alberto, so will the trade spat actually be averted? And good morning to you.
Good morning. I think it will be delayed fundamentally. Basically, the two sides both sides are optimistic that a so-called grace period will be extended. And the EU side in particular is hopeful that that extra time will be used by the UK to figure out how to implement the deal itself. Because fundamentally, that's really what this whole argument is still about. It's about implementing what Boris Johnson agreed to last year.
So what happens to the grace period beyond June?
So basically, the way the deal was structured, it already had a grace period built into it to allow businesses and local authorities and the government to prepare for certain checks, for example. And that period was then extended further back in December until June. It now runs out until June. And so, for example, an agreement could look like is another 6-month extension until the end of the year. But what's really important in terms of avoiding a trade conflict in the longer term is that those 6 months are used to actually implement what's in the deal. And on that, there is still no agreement. So it's a truce,
what do we know that? Yeah, with the truth. So what do we know is happening today? EU officials are, could we find out more today, or will it kind of be drip fed, I guess is how you say it, drip fed over the next couple of days?
Well, so what's happening today is that EU ambassadors are meeting, and so basically they will, in theory, sign off to an extended grace period. And once that green light is in place, what will happen is that the European Commission will talk to the UK, and the gist of that conversation is going to be, what are you going to do in those 6 months? But fundamentally, it is likely, officials on both sides are very optimistic that within the next couple of days, there will be an agreement to extend that grace period.
Alberto, thank you so much. That was Bloomberg's correspondent at large, Alberto Nardelli. Now, coming up, HSBC apologizes to customers in Hong Kong after a Twitter post sparked confusion over access to its services abroad. We'll get the latest live from Hong Kong. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Gas is part of the solution for a longer-term transition.
We give a lot of emphasis in our strategy to natural gas, in particular LNG.
But certainly gas is going to play a really important role.
We need oil and gas to allocate part of the cash to greener energies, to renewables, and to make the transition real.
Carbon price is absolutely essential, but it's also absolutely insufficient.
Carbon pricing is important, but innovation as well, and policies are also very important.
Policy is going to play a very important role.
The majority of governments are taking this very seriously, but it has to be an integrated solution.
We also have to have policy and regulation that mandates things that are not going to be moved by just carbon pricing.
Some of the biggest names in the energy world discussing the transition to green and the role of gas and carbon prices. Now, the Qatar Ministry of Commerce and Industry Investment Promotion Agency, Qatar and Media City Qatar, are underwriters, as a disclaimer, of the Qatar Economic Forum powered by Bloomberg. Now, let's turn to Hong Kong. And HSBC has apologized to customers in Hong Kong after a Twitter post sparked confusion over access to its services abroad. Yesterday, the city's residents were spooked after the post shared a link to updated online and mobile banking terms on HSBC's website. It said customers may not be able to use online or mobile banking outside of Hong Kong from July 26. But HSBC also reassured customers that this was not the case. Let's get more with this with Bloomberg's Denise Wee, who joins us from Hong Kong. Denise, thank you so much for joining us. So what's exactly happening with HSBC and what spooked customers?
Hi, as you pointed out, I guess it all started with a tweet yesterday where someone highlighted amendments made to the terms and conditions to online banking, mentioning that, the customers are no longer able to access or may not be able to access such services overseas. And this has clearly spooked a lot of anxiety in the city. People are worried about moving money. Hong Kong is a hub, and it's important to be able to move money across borders. It's worth noting that HSBC has very quickly said it's business as usual. There are no changes. Customers can still go ahead and transfer money online banking overseas. But nonetheless, it's just a bit confusing to people. Hong Kong is such a big market for HSBC, and most people bank with HSBC. And it's also been a difficult time for Hong Kong with Apple Daily, with the tabloid being under attack. Sentiment is quite fragile at the moment.
So, Denise, will customers continue to be worried, or is there anything actually that the bank can do now to basically make sure that they're appeased?
I think the bank has very clearly said that, people don't have to worry, that they can make transfers as usual. But I think the fact that the document is still on the website, it just raises questions. People are still wondering why there were changes, why that's on the website. That's not super clear. I think the clearer things are, the better. There's been no super clear explanation. I think the bank has said they were combining terms and conditions and trying to make things easier for customers. But I think at the moment, people are still sort of wondering why, if that's the case, why there were some changes on the website.
Yeah, thank you so much for joining us today, Bloomberg's Denise Wee. Now, let's also actually have a look at what markets are doing. A lot of the focus is what we heard from Jay Powell. He didn't really give us any new indication from what we heard the previous day about inflation and the like. So I'm looking at Bitcoin maybe as a litmus test of exactly how much we'll see in the markets in terms of volatility. Now, for the moment, you can see stocks pretty much steady. Comments from the Federal Reserve, of course, eased some of the investor concerns that faster inflation would spur policy tightening. I'm looking at treasuries. They're down. Dollar gauge actually edging higher. Oil climbing above $73 a barrel. I don't know if we have oil for you, but it's a good one to look at today after data signaled another decline in U.S. crude stockpiles, and that really seemed to add to the bullish outlook. And finally, Bitcoin, 33,927,000. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins us out of Berlin. Kelly Lyons out of New York. We'll talk New York. We'll talk the Fed. We'll, of course, talk a lot more about the big heavy hitters joining us from the Qatar Economic Forum. Today, we'll hear from the names like Tom Barrack, Axel Weber, Larry Fink, and Hillary Clinton. This is Bloomberg.
A bit of a historic day. It was the first time Indigenous designers showcased at Australian Fashion Week, and it was a full house of all Indigenous talent.
It made me so proud. Absolutely beautifully done. I mean, the designers, the pieces on there, I think just about every model or every second model was like, oh, I want that, I want that. So each of my pieces, we have our signature prints, which are each tell a story and is definitely a contemporary way of experiencing Aboriginal culture. And then each of my pieces are named after, inspiring Aboriginal and Torres Strait Islander women. So when the customer buys something, they're learning about the story, they're learning about women. I would hope that it isn't tokenistic, and I would hope that it's not done to tick a box. And so, those things have to be, you have to be mindful about that. But I think it's incredible what's been achieved so far, but, there's always room for growth. I think the elevation of Aboriginal and Torres Strait Islander people in these spaces, it's long overdue, and it's a really powerful and incredible time, I think, and to be a part of that is really special.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's very hard to say what the timing of that will be. When will these bottlenecks
disappear. Prices have come way down, but they're still pretty high.
Pure underlying demand supply fundamentals are putting commodity prices to the levels where they are.
The penetration of vaccines around the world is going to take time, and it has a meaningful impact on intercontinental traffic.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. in London, 11 a.m. Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, June 23rd. Our top stories today. Jay Powell holds the line on inflation as the Fed chief leads a number of his colleagues in hammering home that the central bank is nowhere near raising rates. Plus, Hong Kong starts the first trial under its new national security law, raising questions about the city's independence and future. And New York City election, Eric Adams leads the way for Democrats, but a final count may take weeks. Kaylee, the markets for the moment seem pretty solid. I'm not really sure I'm seeing a real catalyst for today's price action, up or down.
Yeah, that's true, Francine. I mean, overall, I would say the markets yesterday seemed encouraged by the testimony from Fed Chairman Jerome Powell on Capitol Hill, reiterating again his thinking that inflation will be transitory and saying the Fed is in no rush at all to raise interest rates. Where that left us in the Asian session was a bit mixed. You did have Australian equities actually ending the day lower as Sydney takes steps to restrict movement amid the Delta variant concerns. You did have Chinese and Hong Kong equities higher, though, really led higher by big tech, which broadly was stronger in the Asia Pacific today. In foreign exchange, though, I wanted to note the Thai baht, which is weaker against the U.S. dollar by about 0.4%. That is after the central bank left rates unchanged, but did cut its growth forecast for the year. And meanwhile, in the G10 space, it is the Japanese yen that is the big underperformer, right now sitting at 110.91, which is its weakest against the U.S. dollar in about 3 months. Speaking of U.S. assets, as I said, stocks seemed encouraged by Powell yesterday. We did see stocks hitting an intraday record high, though we closed just off of those levels. And this morning, futures are clinging to positive territory, but only up about 2 points on S&P E-minis. In the bond market, we're inching higher on the 10-year yield, around 1.47%. So really not much changed from where we were last Wednesday prior to the Fed decision. We've really made a round trip despite all of the volatility we've seen in the bond market over the last week. In the commodity complex, I wanted to point to copper. Of course, had its worst week in more than a year last week, but now up for a third day in a row positive every single day this week, up about 0.8% when it comes to futures right now. And of course, have to note Bitcoin, Matt, it dropped below 30,000, actually below 29,000 intraday yesterday. Today, though, we are right below that $34,000 level. So talk about a rebound. That intraday chart yesterday was something quite remarkable, Matt.
Yeah, I know Tom Keene was waiting for an entry point, so he, backed up the truck at 29,000 and just loaded it up, driving the price ever higher. Take a look at European markets here. We see a little bit of a mixed picture, although it's more to the downside now than it was 10 minutes ago. You see the DAX is one of the biggest losers, or Germany is one of the biggest losers there. France is also down, as is Portugal. Take a look at the DAX index. I was just checking it out. 27 of the 30 DAX stocks are down. Only 3 are gainers, so off more than 0.5%. It was the biggest winner yesterday with kind of the reverse breadth. The euro is off a little bit against the dollar, even though the dollar is down against a basket of other currencies, and the pound gains against the greenback as well. So watch small moves in FX. And then Pernod Ricard boosting profit guidance, saying that it's going to have a 16% gain in profits because of, well, I guess we're drinking more at bars. And Pernod Ricard maybe is something you drink less at home and more when you're at the Carlisle, Francine.
Not if you're French, Matt. I mean, Pernod Ricard all the way. It's interesting, actually. I was looking at some of the breakdowns, Matt, of where people drink the most at home or where they drunk the most at home in the pandemic. And it seems like it's a really cultural event. So the Brits drunk more at home, for example, than the French that feel inappropriate to drink at home unless it's wine.
The Brits drink more than anyone anyway, at home or abroad. The Brits drink more than anyone.
And you can see it in revenue.
Am I wrong about that?
No, actually, you see it in the revenue, so it's not even a judgment. I mean, we can't generalize, but it is in the revenue of a lot of these companies. Now, look at what's ahead today. At 8:30 a.m. Eastern Time, we'll get a rate decision from the Czech Republic. The country's central bank is expected to make its first hike since before the pandemic to tackle inflation. Lots more Fed speakers today as well. At 9 a.m. Eastern Time, Governor Michelle Bowman addresses a conference on economic resilience. We'll also hear from Atlanta's Raphael Bostic and Boston's Eric Rosengren later on. 9:40 a.m. New York time, we'll have June PMI readings from the U.S., then their new home sales data for May shortly after. Now, New Yorkers took to the polls to cast their votes in the city's first-ranked choice election. At the end of the first day of counting, former New York Police Captain Eric Adams came away with a decisive lead. The final results of the Democratic primary, though, could take weeks to decide. Our Bloomberg surveillance anchor Tom Keene joins us with the very latest. Tom, if you put this into context, so is it a truth that whoever wins the Democratic primary then becomes New York mayor?
Oh, yeah, there's no question about that. I think you've got the right phrase, Francine. Context is what is necessary here. There's lots of discussion about the horse race and ranked choice voting and such, and, we can redux the math on that, but Mr. Adams clearly is ahead of two other good candidates, and there's about 42 other candidates behind, with Mr. Yang already dropping out. What is so important here is the shift for this great metropolis. You mentioned, is it an assured win? Yes, it is. On the city council, there are, I believe, 3 Republicans, 2 from Staten Island, and 1 way over in Queens, sort of in the land of JFK and north of JFK. But what's so important here, Francine, is the fabric of the city. This is a 2-year cycle because of the census of 2020. Instead of 4 years, it's 2, and then they do 2 again with the reapportionment coming up. And what's important is not just the mayor race. It's about the comptroller, which clearly seems like it's gone more liberal, more progressive. It's about the attorney general, which is heatedly debated, particularly with Mr. Vance retiring and all the politics around the politics and business of Mr. Trump, the former president. But it's also, Francine, about the 51 council seats that make up these 5 boroughs.
Tom, and of course, in addition to the intercity dynamics, there is also the relationship between the city and the state. If we do end up with a Mayor Adams, what is his relationship with Governor Cuomo likely to look like?
Easy answer, going back to my childhood, Kaylee, fractious. It has always been fractious. I don't see any change in that whatsoever. What is interesting about the state is the dynamics of the 2 legislative branches in Albany between Republican and Democrat. If the Democrats hold a majority up there, which has been a rare occurrence happening now, that gives more power, more organization, more cohesiveness to get something done between New York City and up the Hudson River to Albany.
All right, Tom, thanks very much for joining us. Tom Keene, their co-anchor of Bloomberg Surveillance, talking to us about the New York City mayoral primaries. Hong Kong has started its first trial under Beijing security law that was imposed last year. A 24-year-old man has pleaded not guilty to charges of incitement to secession and engaging in terrorist activities. Joining us now from Hong Kong for more is Stephen Engel, Bloomberg's chief North Asia television correspondent. So, what do we know about this security law, which, I think one of the most interesting facts about this morning is that HSBC publicly supports this law.
Well, yeah, you kind of have to go along with the tide in that sense after, a year now of being under the national security law here. It has been a big blanket hanging over this city. It's been a turbulent year since June 30th of last year when that law was imposed. We've since then had a total revamp of the electoral process here. Many of the pro-democracy former lawmakers have been arrested. The Apple Daily, I'll get to that in just a second. That paper effectively has been forced to shut down. It was a big proponent of democracy and, tackling corruption of officials. We've had the coronavirus. You've heard of that. And now we've had this first trial, and there's really no legal precedence of this first trial under the national security law. So it's going to be closely watched to see how this panel of 3 judges who are picked by the chief executive, no jury, I might add, on how they're going to handle potential conflicts between the existing basic law, that's the mini constitution, and the national security law. And there are conflicts and could create a legal roadmap for prosecutors for other cases, including Jimmy Lai, who stands, accused of national security offenses as well.
Stephen, thank you so much. Stephen Engel there from Hong Kong. Now, it's 5 years since the Brexit referendum in the UK. Now, British and EU officials, we understand, are increasingly optimistic that they will avert a trade war. They believe the two sides will actually strike a truce in the dispute over checks on goods moving into Northern Ireland. Let's get more from Bloomberg Senior Executive Editor David Merritt. David, not as, I guess, embattled as before these negotiations.
Yes, that's right. The key word here is truce, not actually a resolution, of course. This big question about how to keep the border in Ireland open. The Northern Ireland Protocol was supposed to solve that. It's caused more problems, of course, on the British side in its implementation. And we saw lots of theatrics about this at the G7, threats to unilaterally pull out of that accord, trade tariffs from the European side. What we understand now is that they have agreed to extend the deadline for these things to be implemented, which was supposed to be the end of this month. That's going to diffuse some tensions, but it doesn't solve the underlying problem, which is that the Europeans don't want any sort of compromise to their single market, nor do the British. So yet again, this question of Northern Ireland bedeviling the Brexit situation. Remember, it undid Theresa May's premiership. Boris Johnson will be very keen for it not to undo his. But, seasoned Brexit watchers like you and I, Francine, we're familiar with this, aren't we? Kicking the can down the road. That's what we're seeing. No agreement yet, but that's what we expect to see. But at some point in the future, they need to be some sort of compromise in order to come up with a permanent solution for Northern Ireland.
All right, Bloomberg Senior Executive Editor David Merritt, thank you so much. Time now for a quick check on some stocks moving in pre-market trading here in the U.S. And of course, I have to begin with one of the latest meme stocks, Torchlight Energy. This is a stock up 900% year to date, and the company yesterday deciding to cash in on that rally, selling $100 million worth of shares. On that news, the stock fell 29% yesterday, and once again is lower by about 11% in pre-market trading. One stock moving to the upside, though, is KB Homes, the, of course, home builder. It will report results after the bell today, and investors buying the shares ahead of that. It's up about 5.4% before the bell this morning. And another stock moving to the upside is Alzheimer's Neuro, a biopharma company, just made its public debut last week. It IPO'd at $5 a share. This morning, though, at $9.44, up about 12% in early hours, Francine.
Thank you so much, Kaylee. A lot going on. Coming up next, we speak stocks, we talk inflation, maybe Bitcoin with Maria Vaitmane, State Street Bank Senior Multi-Asset Strategist. And later on, Simon French, Panmure Gordon Chief Economist. We're also looking at Pernod Ricard. Matt Miller has some great stats, actually, on the country that drinks the most at home. So we'll talk about that as well. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, last week, when the Fed took a slightly hawkish turn, everything made sense for a brief moment, and investors sold off the 10-year treasuries that they were holding. That pushed the yield up almost to 1.6%. But in the following days, they started buying those treasuries again, and the yield came all the way down to 135. Now that we've heard a couple of Fed speakers, and yesterday we heard from Jerome Powell, the man himself, that he sees inflation as higher than maybe he had expected, but still believes it's transitory. Rates have gone right back to where they were before the Fed meeting on Wednesday. Joining us now is Maria Vaitmana, Senior Multi-Asset Strategist at State Street. Maria, what are we to make of the Fed's hawkish turn and its lack of effect on market rates?
I think the key point is don't fight the Fed. So if Fed is telling us that they're not going to raise rates substantially anytime soon, and I mean, I don't take 50 basis points potential hikes in 2 years' time as any kind of major change in direction. So if Fed is telling us they're staying pat for a long time and economies are reopening, growth is being strong, earnings are recovering, then there is no reason not to be optimistic on risk trades.
But Maria, the concern is that I think the Fed, actually surprised the markets last week. So you don't fight the Fed, but what are they actually, saying? And what if they're talking down inflation and it's there? Like, there was a big repricing last week. Do you think it was the market's misunderstanding or the Fed miscommunicating before?
I think it's potentially reading too much into what Fed was saying. Dots are dots, and we know that, what Fed is subsequently was trying to tell us that, okay, we see economy being a bit stronger and we're watching it, but it still seemed transitory to them. They talk about labor market. So I think market maybe read a little bit too much into the kind of movement and dots. And Fed is obviously a bit more active right now, but we're still sitting at a very, very accommodative end of monetary policy. And the changes in policy that Fed is talking about are still exceptionally gradual. And yes, they moved dots a little bit forward, but what's interesting, the overall number, kind of the R star, the final dot, that has not moved. So to us, the slight shift in Fed shouldn't really kind of damage growth outlook, which is very, very strong right now.
Well, Maria, this was a market that was looking for a catalyst. We have been range bound for some time. If it's not going to be the Fed, what's it going to be?
Yeah, no, I think that's actually a really, really good point. I think market is looking for something to move. And what we had is, and actually what is interesting right now, I'm looking at Wix index, and it came down to kind of this year's, not far off to the lowest point in the year. So yes, there is very little volatility, there's little happening. And I think in that world, reflation is kind of the path of least resistance. It's almost your default rate. And we potentially going back to carry trades, we're going to equity kind of melting up higher. We're seeing kind of reflation stocks doing better because Fed doesn't seem to have upset that apple cart.
Is there an inflation hedge that you like, Maria? I often think about trying to find stocks that can easily pass cost increases through, and that being, for example, a good hedge.
That might sound a bit controversial, but I really, really like technology stocks as a hedge. To me, that's on a good risk-on day when we're thinking about growth, when we're thinking inflation, they maybe play a second fiddle. On a day like Friday, when we had a lot of concerns about growth, a lot of concerns about what's going to happen, how quickly Fed will move. Technology stocks had an upper hand, and it might not necessarily be like your inflation hedge, but that's a very, very good market hedge. When we worry about sell-off, we worry about kind of risk-off. We know that technology stocks, they've shown it last year, they can make money pretty much in any market environment, and they're in amazing position of stable, fast-growing earnings. That's very, very rare to find in equity market, and that's proving to be a very good trade to me.
Maria, what do you do with commodities right now? What do they tell us about the rest of the asset markets?
Yeah, commodities are really interesting, and I think it's very interesting to see this kind of bifurcation with oil price continue to go stronger and kind of industrial metals suffering a little bit. I suspect some of kind of pullback in metals probably to do with China and trying to kind of control commodity market and get rid of kind of maybe some speculative froth in there. But in general, I think, as I said, we like reflation trade. We think that growth is being continued to be strong. So you have to stay with commodities. I think there is a little bit of selectivity within the commodity space, but overall we're quite positive.
All right, Maria Vetmana, sticking with the reflation trade, thank you so much for joining us. Of course, she is Senior Multi-Asset Strategist at State Street. And coming up later on the Open, SEC Chair Gary Gensler joins Bloomberg for his first conversation in his new role. That's at 9 a.m. in New York, 2 p.m. in London. Don't want to miss it. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now let's get straight to the Bloomberg. First for news and the wait time. for semiconductors has hit a record 18 weeks. Now, research by Susquehanna Financial Group shows that up 7 days from the previous month, the gap is already at the most since the firm began tracking data in 2017 and 4 weeks longer than the previous week in 2018. Now, longer lead times for power management chips, semiconductors that regulate the flow of electricity, are a primary reason for the overall increase. Also, HSBC Holdings has apologized to customers in Hong Kong after an update to its online and mobile banking terms triggered fears over overseas access to its services in the financial hub. The apology from Hong Kong's biggest bank underscores growing concerns in the city over pressures on businesses as China tightens its grip. Well, evidence includes a recent order for 7 lenders to stop dealing with the pro-democracy paper, Apple Daily. And Morgan Stanley has told employees they'll need to be vaccinated against COVID-19 to enter its New York offices. The chief executive, James Gorman, says about 90% of returned staff have already had their shots. Well, the firm says the goal is to help create a normal office environment without the need for face mask and physical distancing. And we have looked into the legal implications, Matt and Kaylee, and one of the things is that actually employers cannot look at your past, but this is not whether you're healthy or not. It's a vaccination, so they're allowed to do it.
Yeah, that would make sense. I mean, you want your people to be able to move around freely. You don't want them to have to wear masks or have plexiglass dividers on their cubicles. That would, I think, drastically reduce your pleasure in coming to work. So you require a vaccination, then they can't get sick and can't get other people sick.
Well, and then it removes the need to operate on the honor system, because that's the whole issue around people who are vaccinated no longer being told they need to wear masks. How do you know if they're not vaccinated? As an employer, that's definitely a concern, Francine.
Paperwork. I'm so European. Paperwork. Coming up next, Simon French for Panmure Gordon. This is Bloomberg.
excluded from the workplace, especially when you've got skills and motivation and things to give, can have a really detrimental effect on people's well-being. They can become isolated, of course have the financial stress of not being able to support themselves. That might be their first entry into the broader community where you're building relationships with workmates, and so that's your exposure to culture and you're starting to feel like you belong.
Some people might need to practice their English more, they might just need just some practical experience in an Australian kitchen.
I have not from Australian friend now, but in the kitchen I have many friends.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Matt, we saw the Fed yesterday. It was pretty much expected, so it's not really moving the market so much. So we kind of wait for a catalyst.
Yeah, absolutely. I mean, Powell spoke, but he said pretty much what he said last Wednesday and kind of what he's been saying all along. Although he did say inflation is more than the Fed had anticipated, and it's possible that it's more persistent than they expect. So it'll be interesting. Obviously, markets didn't price that in because that's not what markets do these days with the Fed. They bought stocks and bought bonds instead and sold off the dollar.
Kaylee, how's it playing out in the markets?
Well, it's interesting, Francine. Actually, the older the session grows, both in Europe and in the future session here in the U.S., the weaker it seems to be becoming. Right now, when you take a look at the stock 600 over in Europe, it is the most down that it has been at any point in the session thus far. Right now, the stock 600 off about 0.4%. Here in the U.S., futures briefly went to unchanged. We are just up now a little more than a point on S&P E-mini, so it doesn't look like it will be the firmest open in about 4 hours' time. Matt was talking about the fact that investors actually bought bonds yesterday. We are seeing the 10-year yield ticking up just a basis point today, 147, which effectively is where we were a week ago on Wednesday before the Fed decision. So it's like nothing has changed at all. And then, of course, I have to talk about Bitcoin. It dropped below 30,000 yesterday, then had a really incredible rebound to end the day, basically unchanged and climbing once again today, right around that $34,000 level. Of course, with Bitcoin moving higher, that means stocks tied to cryptocurrencies are also moving higher in pre-market trading. You have Riot Blockchain, Marathon Digital, each up around 2%. To the downside, though, Torchlight Energy, a small Texas oil player, one of the latest meme stocks that had been bid up dramatically in recent weeks. The company capitalizing on that, selling $100 million worth of shares. As a result, the stock fell 29% yesterday and is lower by another 9% in early hours this morning. And BioXcel, another stock with a $100 million share sale, that stock is down about 8%. Investors not liking that so much, Francine.
Yeah, we'll have a more in-depth look at some of these big stock movers. Now, Jay Powell led a slew of his colleagues in saying that while a debate on tapering may be on the cards, the Fed is nowhere near raising rates. Now, he testified before a House committee yesterday.
We will not raise interest rates preemptively because we think employment is too high, because we fear the possible onset of inflation. Instead, we will wait for actual evidence of actual inflation or other imbalances. A pretty substantial part, or perhaps all, of the overshoot in inflation comes from categories that are directly affected by the reopening of the economy. I will say that these effects have been larger than we expected, and they may turn out to be more persistent than we've expected. But the incoming data are very much consistent with the view that these are factors that will wane over time.
Well, joining us now, Simon French, Chief Economist at Panmure Gordon. Simon, I really also want to ask you about the UK economy and Brexit, but what we heard from the Fed is pretty much the same message, is that, yes, it's transitory. Look, don't expect any harsh moves from the Fed. Was there a misunderstanding in the markets last week, or were they right to reprice?
I think there was a fundamental misunderstanding. I don't think there was any expectation that the Fed would change its communications message before August. Our own internal view is that substantial further progress, which is the metric for starting to talk about tapering the $120 billion worth of asset purchases, will require about a cumulative 2 million jobs added over the course of the June and July payrolls data out of the US. Of course, it's not only one metric, but I think it's our key headline metric to see at least a comma shift at the Jackson Hole meeting at the end of August. If we don't get those jobs numbers, then I think an even more dovish tilt will be necessary, because markets will look for an update on what that substantial further progress actually looks like.
Simon, what does that mean for treasuries?
Well, we still see yields moving higher. What's really quite interesting is that, it's an extraordinary outlier to see CPI inflation north of 5%, but treasuries, at least at the long end, low and indeed moving lower. We have a end of year target for 2.5% for the 10-year. And that may seem quite paradoxical because we expect inflation to be transitory and the CPI and the PCE print to come down. But I do think there's an awful lot of mispricing going on at the moment, just in terms of the sort of historic relationship you see between inflation and yields. And I expect that'll normalize, perhaps at the same time as those transitory effects that Jay Powell was talking about will start to leave the index.
In terms of the $120 billion a month, Simon, does that make sense, and for how long?
Well, I think there is enough strength in the US housing market, indeed globally. You look at the G20 housing markets, they've all been fueled by this shift in utility function of a lot of us have spent an awful lot more time than we'd planned or even wanted in our houses in the last 16 months. That's fueling demand in that market. And therefore, do I really think there's a justification for the mortgage-backed securities element of that 120 billion to be continued at this stage? No, I don't. But having now guided markets to have a threshold level in terms of substantial further progress, it would be a strange thing for that 120 billion to be tapered immediately. There needs to be a journey that markets are taken on to avoid, volatility, the type of volatility which starts to tighten financial conditions somewhat faster than the Federal Reserve and indeed the Treasury are comfortable with.
Are you more concerned, Simon, with the debt built up by, talking fiscal here, not the Fed, by the stimulus needed during the pandemic, or are you concerned about the drop-off in fiscal that it looks like is ahead? We've gone from, $5 trillion in stimulus to thinking about $500 billion in infrastructure.
Honestly, Matt, I don't really worry about either of them. Maybe that's massively complacent of me, but from the perspective of the amount of stimulus built up to support the pandemic, when you had a forced shutdown of the economy, what is the fiscal authority, the insurer of last resort for household and business income, supposed to do? It's supposed to leverage its balance sheet. It did the right thing. Now, does the drop-off cause problems if private sector demand doesn't come back in and take its place? Well, of course it does. But all the indicators we see in terms of pent-up demand, the potential for the US consumer, the global consumer, to go out and spend a lot of not just their deferred consumption, but also in the case of the US consumer, their additional disposable income. I think all the signs are the private sector is ready to take the baton back off the public sector. So I don't worry about either of those two.
Simon, we have the BOE decision coming up tomorrow. How has Jay Powell and the Fed set the stage for Andrew Bailey and co.?
Great question, because I think there's some big mispricing in the marketplace that just assumes that the Federal Reserve is going to go first with both its tapering and its increase in the Fed funds rate. How has Jay Powell set the scene? Well, he set the scene rhetorically for the MPC to continue talking about supporting financial conditions in the UK, transitory inflation, largely the same playbook. But where I think the mispricing is historically, if you go back to the Second World War, you see the Federal Reserve move first, and the Bank of England about a 9-month lag on average. I think tapering and the first rate increase comes first in the UK rather than the US in this cycle, not least because the headroom under the flexible average inflation target that's given to the Federal Reserve there's nothing like the same headroom when you track UK price inflation, which is average bang on 2% over the last 20 years. There's much less for them to eat into, and therefore I expect tapering to be announced potentially as early as the August MPC, and then a rate increase towards the back end of next year. This is very much setting up the Bank of England to move first after the Federal Reserve. Before the Federal Reserve.
And all due respect to Mr. Bailey, but will their real newsmaker out of the BOE tomorrow potentially be Haldane?
Well, look, you're absolutely right. I mean, Andrew Haldane is the outlier. He's the arch hawk on that committee. He leaves at the end of June, so it will be his last meeting. Will he move further than the position he took at the last MPC meeting, which was to taper asset purchases? No, I think his vote will remain the same. What will be interesting is whether that move brings other, more moderate, at least historically moderate members of the MPC with him. I think there's a good chance that we might not see a vote shift, but we see in the minutes, we see some indication the Bank of England is readying markets for perhaps not purchasing the last 30, 40 billion pounds worth of gilts that are scheduled for Q4, and actually may end their asset purchase program rather than the end of December, but the end of September. And that would be a Haldane triggered move, I think, but it would be a welcome move in my opinion.
Great, thanks so much. Simon French, their chief economist at Panmure Gordon. I know we'll all be watching the Bank of England very closely. Now, in the meantime, German Foreign Minister Heiko Maas and the visiting U.S. Secretary of State Antony Blinken are giving a joint press conference in Berlin. I know our Matt Miller has been all over this. We also found out a little bit earlier on that Mr. Blinken could actually meet with a Chinese diplomatic envoy as soon as that next week. That will be a very interesting conversation, especially after we heard Justin Trudeau being quite tough on China. Matt, I imagine this is causing quite a lot of commotion in Germany because the Secretary of State has arrived in Berlin.
Well, there hasn't been that much commotion. We do see, of course, right outside our offices, lines of police cars and limousines because most of the big diplomats stay right across the street and the consulate is directly behind me. So in terms of what we see of, dislocations here in Berlin, there hasn't been much. And keep in mind, the Germans are much happier with this administration than they were with the last. So they're much more hopeful in terms of working together. And of course, this German administration is about to be done in September, and we'll then look forward to new people filling these seats. So I think you're going to find them a lot more congenial than they would be under many other circumstances.
We'll follow, of course, that press conference. Coming up also, the former New York policy captain, Eric Adams, leading after the first round of counting in the Democratic mayoral primary. So we'll discuss the mayoral race next. This is Bloomberg.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
We know there's going to be 2s and 3s and 4s. We know that. But there's something else we know. That New York City said our first choice is Eric Adams.
That was former New York Police Captain Eric Adams, who is leading after the first round of counting in the Democratic mayoral primary here in New York City. But the final vote may be weeks away. Marty Schenker, Bloomberg editor-at-large, joining us now. Marty, it is not over yet. There are still several more subsequent vote counts that need to happen because of the ranked choice ballot. And of course, he still would need to win the general election in November. But what does his early lead tell you about the priorities of the New York City electorate?
Well, it tells me that the quality of life issues that dominate the discussions in New York City are what made it possible for Eric Adams to come in first place. And certainly I'd rather be in Eric Adams' position than any other position in this race. So he has a pretty good chance of being the next mayor.
Marty, I mean, what's interesting is, of course, this crucial advantage he has with a focus on law enforcement. Does it give us an indication of other parts of America and the way they will vote with this focus?
You know, I don't know that you can extrapolate what happens in New York City to any place else. It is, as you know, a very unique place. The conventional wisdom is that New York is a very liberal town. But when it comes to politics, it seems that the issues of quality of life, of crime, of making the city work are the things that really matter to New Yorkers.
Marty, last year in a MotoGP motorcycle racing championship, Joan Mir didn't win almost any races. He only had one win, but he got second and third at almost every race, and as a result, he was the champion for the year. I was sure that this would happen to Andrew Yang. How did he come in fourth after polling so well?
Well, you know, I do think that he made some really strategic errors in this race. Questions arose about how well he knew New York City when he named Times Square subway station as his favorite subway station. That a lot of New Yorkers questioned whether he'd ever even been in that station. So I think he just you know, whether his authenticity was questioned, and it cost him in the polls.
Marty, I want to expand beyond New York City politics, talk about broader domestic politics here in the U.S. Yesterday, the For the People Act, the voting rights bill, was blocked in the Senate. Party line vote, 50-50, once again putting the issue of the filibuster at the forefront. Do you think yesterday's events give fuel to the fire for those who want to get rid of the filibuster?
Well, it'll certainly energize the progressives in the Democratic wing who want Joe Biden and the Democratic leadership to take the reins while they still have power and eliminate the filibuster. But Joe Manchin and Kristen Sinema have said no way. And as long as they are dead set against ending the filibuster, the voting rights bill is dead. And there's really no way of Democrats to take that back to the Congress.
Marty, thank you so much. And then we could spend the next hour also talking about U.S.-China. Never dull. Marty Schenker, there, our editor-at-large. Now, coming up, part of our interview, the Glencore chief executive, Ivan Glassenberg, from the Qatar Economic Forum, powered by Bloomberg. That's coming up next. We talk commodities, super cycle, oil and gas. This is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, Chinese efforts to cool commodity markets may be short-lived. That's the view from the Glencore chief executive, Ivan Glassenberg. We spoke at the Qatar Economic Forum, powered by Bloomberg.
You got the big infrastructure spend, which is occurring in China at the moment. It started early when the COVID crisis hit and the Chinese got out of the problems. They started spending on infrastructure and pushing the infrastructure fiscal spending, and that started the rise of commodity prices. You also had a few disruptions around the world in certain commodities because of the COVID, and that tightened up supply, and that allowed the commodities to push up to where they are today. You also have infrastructure in picking up in various parts of the world, but we do see it coming in the United States when eventually they pass the infrastructure bill. And the speculation of commodity prices picking up on the back of that will start driving them up. So I think the pure underlying demand supply fundamentals are putting commodity prices to the levels where they are. I know recently the Chinese have tried to push it down to bring it back to lower levels. I think that's a short-term game because the underlying fundamentals will keep it at these levels.
So how much can they actually try and talk it down, China?
Well, they're not trying to talk it down. They're taking some material from the strategic stockpiles and putting that in the market. Now, how big the stockpiles are, we don't know exactly, but they can do it for a while. But eventually, they got to restock the strategic stockpile. They can't keep it at these low levels, so they'll come back into the market. So I think it's a short-term phase.
Short-term, like a couple of months? Are we actually at the start of some kind of super cycle, but a super cycle that's very different from last time around?
Yeah, well, what was long? We've had two sort of super cycles, you can say. In 2002, we had the Chinese coming into the market where you had the big push on commodities. The world wasn't ready for that amount of demand, and you had commodity prices rise considerably. Then the world sort of caught up a bit, but then you had the 2008 financial crisis, pushed down commodity prices. Chinese came in big with infrastructure spend in 2009. That kept it strong. Unfortunately, then the mining industry got the usual situation where they started producing too much, increased production, opened up new mines, and started producing more. That pushed it down, and you had the 2015 commodity price drop. Now it started looking better until COVID. COVID pushed it down, as we said, and now we got the rise with the infrastructure spending occurring in many places around the world. Is this a super cycle? I don't know if you want to call it a super cycle, but I do believe commodity prices will stay strong for a long while longer. And I think when the American infrastructure plan comes into fruition and the actual shovel-ready, how many shovel-ready projects they have, I don't know, but let's assume it will take them 18 months to get going. You will push a commodity price will stay high for a long time. You will have both parts of the world pushing infrastructure. You'll have the Chinese continuing with their infrastructure plan. They still got to urbanize a few 100 million people, and you have United States kicking in, upgrading their infrastructure. Demand for commodities will stay for a long time. Can supply meet that demand? Well, that's another debate. How quick the mining industry can increase and bring new projects on, but that's a lengthy debate. New projects, I think, are going to take longer this time around. There aren't many projects around the world. We've developed most of the easy projects. We now got to go into the more difficult regions of the world where there isn't infrastructure, harder political environment, and I think the mining industry is not ready to add massive new tons to the market.
That was the Glencore chief executive, Ivan Glassenberg. Now you can catch more conversations from the Qatar Economic Forum throughout the day, including interviews with Larry Fink of BlackRock and Hillary Clinton. Now I look at what else we're watching today, Kaylee.
I'm watching Capitol Hill and big tech antitrust legislation that will be taken up by the House Judiciary Committee. There's 6 bills, all of them taking different tacks here. But really, the broad theme is trying to rein in the dominance of some of these platforms and strengthen antitrust enforcement. It's not really for certain that these proposals actually become law as they are written up, but still something to watch, Matt.
Yeah, I'll be keeping an eye on Washington as well to see if they get any further on infrastructure. But really, I am interested in what's going on at the Hong Kong Shanghai Banking Corporation. Now, they tweeted out new terms for their customers saying they may not be able to use online or mobile banking outside of Hong Kong. That caused an uproar. They later apologized and tweeted they don't plan on changing any services, but they didn't rescind those terms. So those terms still stand. And you've got to remember that Hong Kong has previously frozen client funds on government orders and has publicly endorsed the controversial China security law that's been used to imprison pro-democracy activists. Francine?
I'm looking at Brexit for a number of reasons. First of all, it's a 5-year anniversary of the Brexit vote. Second of all, we understand that there could be, or that we are closer to a possible truce between the UK and the EU. This is on the controversial sausages wars, whether you can get cold meat into Northern Ireland or not. But also today, there's a new 50-pound coin, that actually a note that's entering into circulation. This is with Alan Turing, the codebreaker mathematician. That note launched today, the final banknote to switch from paper to plastic.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
The Fed is not going to kill this recovery. We've got GDP growth this year and next very, very strong.
I think more surprising in the market was hearing taper talks start.
Growth generally peaks, about a year into the recovery. That's kind of where we are.
I don't know that we're going to go back to spending in the same way. I don't know that we'll go back to buying the same kinds of things.
Of course, the economy is experiencing some frictions. We rebooted the global economy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg Television alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures this Wednesday morning, unchanged on the S&P 500. A simple message coming from Morgan Stanley and Mr. James Gorman, Tom Keene. Get back to work. And when you come back to work, you better be vaccinated, otherwise you're not coming in.
I agree totally, John. Usually Ferro and I totally disagree on how to open the hours, folks, but today John and I are totally on the same page. John, read the details of that statement from the director of HR. This is a hardline approach. You're coming back to the office. We ignore the details on what it means, the vaccines and that. John, it was jaw-dropping.
Yeah, I don't know if there's a first mover advantage here, Tom. I do think it provides cover for others to follow, and I wonder how quickly other banks, other institutions, other companies do follow Morgan Stanley.
No, it's going to be interesting to see, and we see it throughout society. And, of course, the backdrop here, John, we don't need to go into it right now. There's a lot of market activity to talk about. Is this India Delta variant is front and center in nuanced geography to geography. Wall Street's decision is get vaccinated.
We'll catch up with Johns Hopkins a little bit later this hour. Tom, the counting in New York, we're going to be counting, and I believe we'll be counting maybe for a couple more weeks.
Yeah, I've got some, I think it's pretty straightforward, and we don't need to go into all the details now of Mr. Adams of Brooklyn being ahead. John, this is about crime. It's about public safety, and this is a metaphor for every city around the world. The thing that absolutely stunned me is a gentleman from Brooklyn, Mr. Adams, did so well in the Bronx. This is, think Yankee Stadium and north of New York, pretty tough area. Adams, 46%. And Wiley, the liberal, the progressive, only 17% in the Bronx. The Bronx voted for public safety.
Lisa, it is about crime in New York City.
And Eric Adams, a former leader of the New York Police Department, not only was a leader in law enforcement, but also has the experience of having been beaten by cops as a 15-year-old, so trying to appeal to both sides there. Interesting, though, just to sort of follow on what you're talking about, the progressive voices getting less attention as people really focus on bringing the city back, both economically as well as from a quality of life perspective.
We'll be discussing that through the next couple of hours right here on Bloomberg Surveillance. Let's begin with a price action. Muted price action on the S&P 500. Following a couple of days of gains, we shape up as follows on the S&P. We're positive 0.01%. Outside of that, yields higher by almost a basis point to 147.17. Bit of excitement on euro dollar. That is positive 0.01%. Euro dollar 119.41. I think you know, Lisa, why we started with that Morgan Stanley news and not a price action this morning.
There is nothing else going on. That is definitely what's happening, even as we get a bunch of Fed speak. This is the week of Fed speak. Yesterday, we heard from the Fed's John Williams, with you, John Ferro, as well as Michael McKee. A fascinating interview, I've got to say, talking about a more dovish approach that we're also hearing from other leadership in the Federal Reserve, including Jay Powell yesterday. Today, we hear from Michelle Bowman, Raphael Bostic, and Eric Rosengren. The parade of voices continues. The dissonance, yes, very much there on the Federal Reserve in terms of who agrees with who. That said, the leadership, Powell, Williams, coming out very much saying we are going to be patient. It is transitory when it comes to inflationary pressures. 10 a.m., this to me is what I'm watching when it comes to transitory pressures. U.S. May new home sales. The expectation is for it to continue to come in on a robust level. However, just throwing this out in terms of inflation, home prices have gone up 24% year over year as of May. That is a shocking and unprecedented statistic. This is one area where people are seeing inflation in spades. Wall Street firms, yes, they are coming in, bidding up prices, buying up houses. However, the increase in the appetite to buy post-pandemic, as well as on the heels of very low mortgage costs, raising concerns about what potential bubble or what potential froth there could be in this market. At 1 p.m., the U.S. is going to sell $61 billion of 5-year notes. Yesterday's 2-year note sale was actually interesting because it came in weaker than expected, dealers taking down a greater proportion of the notes. John, just sort of speaking to this concern, this preparation for potential taper and potentially higher rates down the line.
Your favorite tomorrow, right? The 7-year.
The 7-year. Well, it's everybody's favorite.
Supply.
There's the potential for disruption there. So
some
it's
exciting stuff coming up on Bloomberg Surveillance through the next 24 hours.
Yeah, it was like England and the Czech Republic. That was exciting.
Did you enjoy that game, Tom? Did you like that?
There was a goal. There was a goal.
There was a commercial for football worldwide. That game right there. unreal. A commercial for Fed Speak
got to
through
explain
the
why
last
we're
24
watching it,
hours.
John.
I'll do that a little bit later,
Do it
Tom.
later,
Let me
please.
start with this quote from Loretta Mester of the Cleveland
Please.
Fed. I think we're going to get more clarity as we get through the summer and get to September. This fits nicely, I think, with the Morgan Stanley news over the last 24 hours. James Gorman, Lisa, really pushing this idea of get back to work. And if you're not here by September, we'll revisit this. And I think many companies, many people, many economists for that matter, revisiting things at the end of summer when the additional UI expires and we get back to school.
What's interesting to me is the fact that JP Morgan, Goldman Sachs coming out with very specific protocol for when people have to get back to the office. Morgan Stanley saying, we're going to be more flexible, but if you're not here by Labor Day, forget about it. It's all off the table. The flexibility is out the window. But this idea that people are more productive in the office, gaining steam, at least among U.S. investment firms and banks.
I'll paraphrase Mr. Gorman. In fact, this is a direct quote, I think. Then we'll have a different kind of conversation. What does a different kind of conversation sound like with your employer, Tom? We'll have a different kind of conversation.
I think you had that like 5 days ago, John.
Is that what I had? I think you and I have that on a daily basis, a different kind of conversation.
Kind of
Joe Quinlan joins us now, Maryland Bank of America Private Bank, head of CIO Market Strategy. Joe, how important is it to get through summer, revisit, reset in September?
Well, John, what you were just talking about, we got to watch the variant. We got to uncork these bottlenecks. We got to see how the inflation numbers come in, housing sales. So I think we'll grind through it. We are the opinion that we are in that transitory phase of inflation. But you've got second quarter GDP nominal growth of 15% when you kind of add it all up. And I think that's kind of peak growth. And then we work down from there. But as you're talking about, getting back to work, getting back to normalization, normalizing some of these activities, that's going to be a story, I think, for Q4 and the Q1. And then markets will price that in as we go deeper into the summer.
What will be the adaptation, not only of the markets, but frankly, Joe Quinlan, and you've been a student of this for decades, the adaptation of corporations to a nominal GDP slowdown we've never seen? How do they adapt?
Well, Tom, I think, Tom, you're right in the sense that the corporations, I think they're terribly resilient, they're dynamic. We're looking for operating leverage to kick in, productivity to really move ahead. I'm astounded when I talk to small, large, medium companies, how much they're using automation, how they're doing things less with more. So I think those productivity gains are going to come down. So when we reset at a lower level of earnings growth, they're still going to drive earnings higher. Maybe not as high as we've seen in the last couple of quarters, but never underestimate how productive and how resilient and dynamic this corporate sector is.
Well, Joe, the corporate sector perhaps is dynamic and automating more. However, this raises questions about the consumer dynamic, about the spending power of individuals that may be increasingly left out of the labor market if there is more automation. I'm just wondering at what point you see that spending power decline in a more material way, especially once the savings rates have come down a bit.
It has come down a bit, Lisa, but we still have a lot of dry powder out there. I mean, Michelle Myers, my colleague with the bank, is looking into the kind of the households, and there's still a lot of liquidity out there. There's a lot of friends of mine, you have them as well. They wanted to go out to restaurants, but it's closed. They wanted to travel to Europe, but you can't do it yet. So I think there's a lot of dry power for manufacturing goods and services out there. And normalization when it comes to consumer spending, that's a story for 22. And that's going to give us we get back to that maybe 3.5% real growth. I think that's how we get there. It's not going to be a nice, unvolatile slide down to normalization. It'll be bumpy, but I don't think we're see any cliff out there, whether it's fiscally or consumption. There's really no cliff out there that we see right now.
Joe, just quickly on Europe, you've said what's good for America is good for blue chip Europe. Do you like Europe right now?
We do, John, for sure. And we buy the companies, buy the countries what they do best, whether it's automobiles in Germany, luxury brand goods in France, Italy, and really Europe has really turned the corner. And I haven't been bullish on Europe, I think, my whole career, but they're turning the corner. They've got good leadership. We see the fundamentals coming in. The fiscal union is being built. So I'm more optimistic, and I really think that the southern periphery, whether it's Greece, Italy, and Spain, they're going to outperform economically, and I think in the markets as well. And I don't think I've ever said that in public.
And nobody talks about Brexit anymore. What a blessing. Joe Quinlan.
Oh, but we should.
Just fantastic.
should.
Joe Quinlan, Maryland Bank of America Private Bank, head of CIO Market Strategy.
All the memories.
TK, 5 years.
Yeah, exactly.
Where has that gone?
5 years on. Folks, I got to do a shout out here. Right? Lisa, hold my hand. We're hermetically sealed. Folks, John Farrow delivered the goods on the day of Brexit. We were sitting there in shock and he picked up the baton, and with the shock of Brexit, was on for, I think, 14 hours straight. I was at Charlie's at Brown's
I
Hotel.
know where you were. I've talked about that story many times about where you were. You did make the market open, though, in Europe, Tom, for the equity market. And I remember sitting in front of the Bloomberg with you.
Yeah.
And what was important about that moment, it felt like a moment. It felt like something big was happening. And then the clock just started ticking, and nothing happened for years and years and years. And Tom, here we are. And when you look at cable over the last 5 years, the pound against the US dollar, right now 139.58.
Yeah, 148-ish the day before.
The lows 114.85. And that was last March. And that had nothing to do with Brexit whatsoever.
I don't know. I think it's interesting how the pandemic reshaped the narrative for Brexit. The idea that actually the United Kingdom had a much better response to the COVID pandemic, frankly, than the continent did, basically in terms of vaccinations. I wonder how much that changed the dialogue.
Certainly, without a doubt, when it came to procuring the vaccines and signing some of these contracts, it had a massive, massive boost, I think, for support to Brexit in a way where Europe was just absolutely flaming. It underlined the ability that the UK had to act alone and the bureaucracy that has held back Europe for a long, long time. Though I have to say, Europe's turned the corner now as well, so I don't hear that conversation as much. Look, we all want to see the whole world get vaccinated and get vaccinated quickly. Though the UK, you have to say, secured those contracts and had that little bit more flexibility, didn't they?
John, the shock of W154BP Mayfair that evening of...
You enjoy yourself, did you?
I was thunderstruck.
I'm sorry I couldn't make it, Tom.
Do these letters and numbers mean something?
Had to work.
I was just... I mean, Charlie's, I got a decent meal at Charlie's, I'll say that.
Does Mrs. Keane know about this night out?
I don't, but Mr. Grigori does. A Red Oak keeper of the Amex folks. He knew about it.
Lovely. 42.37 on the S&P 500, totally unchanged across the board. A little bit of movement in crude. We'll pick up on that later. From New York City, this is Bloomberg.
With the First One News, I'm Rishika Gupta. In a sign of possible easing tensions, top Chinese and American diplomats may meet at a Group of 20 meeting next week in Italy, according to the Financial Times. There's been talks about a meeting between Chinese Foreign Minister Wang Yi and U.S. Secretary of State Antony Blinken, as well as a possible phone call between Presidents Biden and Xi Jinping. Hong Kong pro-democracy newspaper Apple Daily is to publish its last print edition tomorrow. The paper, owned by jailed media tycoon and activist Jimmy Lai, has faced intense recent pressure from the government. Authorities last week arrested the paper's top editors and froze the company's assets under a new national security law. And Morgan Stanley has told employees they'll need to be vaccinated against COVID-19 to enter its New York offices. CEO James Gorman says about 90% of returned staff have already had their shots. The firm says the goal is to help create a normal office environment without a need for face masks and physical distancing. Pernod Ricard has raised its full-year profit estimate after a big rebound in demand. The maker of Absolut Vodka and Jameson Irish Whiskey now expects organic profit growth from recurring operations of about 16% this fiscal year. That's up from a 10% forecast. The French company says the lifting of lockdowns led to an acceleration in demand from bars and restaurants. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is the first early voting count. We know that. We know there's going to be 2s and 3s and 4s. We know that. But there's something else we know. That New York City said our first choice is Eric Adams.
New York City mayoral candidate Eric Adams there. The counting continues here in New York City. From New York, for our audience worldwide, alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the price action on the S&P 500, 42.38, pushing 39 on the S&P 500. There you go, up by 0.06%. Outside of that, yields are higher by about a basis point to 147.33. Euro dollar unchanged at 119.43. Check out dollar yen through 111, the highest level since March 2020. Dollar yen, Tom, with a move of about 0.4%.
Yeah, it's a struggle today, but yeah, over 111 is a big deal. And of course, we've seen a lot of different shops. I think J.P. Morgan and Paul Megacy coming out really looking for significantly weaker yen, and they get on board the strong dollar move. We will see based on the economic data. On the politics, and what we're going to try to do on Bloomberg Surveillance this morning is get beyond the mundane. We know the mundane results. We know about ranked choice now across all of the 5 boroughs of New York. Shelley Banjo leading our coverage to say she's New York bureau chief barely does service to her journalism and her really ownership of this story. I was absolutely thunderstruck by the results of the comparison of Brooklyn and Bronx. These are 2 boroughs. I don't know which bridge attaches to them, but I do know that there's a major difference on a per capita income basis between Brooklyn at $34,000 and Bronx is a lot tougher area. Mr. Adams clobbered the progressive in the Bronx. Why?
Eric Adams ran a campaign around the entire city. You know, he had been in this city for a really long time. He was Brooklyn Borough president. He kind of had that, in his pocket there, or a large part of it. And then he went out around the city and really campaigned Upper Harlem, the Bronx. A huge proportion of the black vote we're expecting to go to Adams, and that also overrepresents in the Bronx. And so you saw other candidates like Wiley not even go out and campaign and spend much time in some of those places, preferring...
Why would she not compete against Mr. Adams for the African-American vote? I just don't understand that.
I think she did campaign for the African-American vote, but it was more of the, progressive, very left liberal kind of leaning African-American vote, not the, necessarily law and order, more conservative vote.
Lisa, to me, and I'm going to be blunt, folks, Lisa's more articulate on this than Farrell and I ever will be. Lisa, I'm absolutely thunderstruck by these results in this issue of public safety in New York.
I'm actually not as thunderstruck, partly because of what I've observed in terms of the priorities of different areas. The idea that quality of life has deteriorated more significantly, so people are more concerned about someone who can restore some sort of order than perhaps they are a progressive agenda. Shelley, what are the additional 12 rounds of counting, and how will they affect the results, given the fact that there is a pretty decisive majority at this point?
Yeah, so we did some data, looking back at all the other ranked choice elections in the U.S. Out of 375 of them, 350 of them went to the first choice winner, the person who got the most first choice votes. So the likelihood is that Eric Adams is going to go on and, really clinch this race. However, because of ranked choice, because of all these rounds, there are a lot more votes to distribute and also a lot more absentee votes that we don't know where it's going to go to. So it still leaves a chance open for Catherine Garcia or Maya Wiley.
Okay, do we have a sense of how long this is going to take and whether in general this was successful. It did bring out more voters, and that actually the attendance was higher than people expected?
Yeah, so in a day yesterday when it was raining and stormy, and of course, you can't really discount that that much. I was a little bit worried about the turnout. We had reporters just panned out around the city, talking to voters, looking at poll sites, and a lot of them were saying, no lines. People weren't waiting like they were for the U.S. presidential elections. And, I was concerned about voter turnout. Right now, the numbers that we have already show that it was higher than the 2013 election, but that was to be expected because of population growth and also just the sheer amount of new voters that were registered during the presidential. Now, we still don't know exactly how many because we're still waiting to count all the absentee votes.
Is New York City this morning more liberal, more left?
Well, I think New York City is really focused on quality of life and crime, like Lisa said. These kind of very brass tacks issues of I step out my door in the morning and I want to know, is it going to be safe if I take the subway? Can I get to my office? Is the trash going to be picked up? It's not even about, kind of the politics at this
John,
point.
Shelley doesn't know this, but I haven't been beneath 59th Street in 4 years. John, you mentioned some of the trash issues down south of Manhattan.
Yeah, and they need to be addressed. The other thing that needs to address is just rebuilding the city, but we're not talking about that at the moment, Shelley, because we have much bigger issues like crime. I remember hearing a story about JP Morgan. The biggest private employer in New York City is JP Morgan Chase. And the story is as follows. It's a short and simple one. The Mayor, Bill de Blasio, had never had a meeting with the CEO, Jamie Dimon. I find that absolutely ridiculous. So, Shelley, my question to you is, who's going to work with these companies to rebuild this city? And what are they actually saying about doing that? What's the outreach look like?
Eric Adams and almost every candidate that we interviewed, leading up to this race said, we want a different administration working with the private sector, working with these companies. Mayor Bill de Blasio ran on a platform that said, I don't want to take any advice. I don't want to take any issues from these companies. So, and Eric Adams in particular, winner, could change that.
This early in the morning, we ask rude questions, so I'll ask a rude question of you. I believe Mr. Adams put up a Mets jersey last night. Daz, am I right? He put up a Mets jersey?
Yes.
They probably checked for substances. I believe Mr. Cohen, the owner of the Mets, did provide funding for Mr. Adams and others. Is Mr. Adams in the back pocket of the fancy people?
He did get the second most amount of money that we've been able to count from a lot of these Wall Street donors. These are the folks who are interested in charter schools. That is one of the issues that Adams has said, education isn't just necessarily about public school children, it's all children. And so, that is quite a difference from Mayor de Blasio. And that's part of the reason why Steve Cohen supported him.
Shelley, thank you. Shelley Banjo, Bloomberg New York Bureau Chief. Tom, can we just clarify that joke, just to keep you out of trouble? There was a Mets pitcher who I believe got pulled aside by the authorities to check for illegal substances.
Yeah.
Is that right?
Oh, you nailed it, John.
Thank you. Okay.
Jacob deGrom, who is Jacob deGrom, who's having maybe the best pitching year in the history of the game, was stopped at the first baseline and checked. And he's such a class act. He went through it with the umpires. I saw last night the Padres-Dodgers game. They did the same thing.
How much trouble do you get in when I'm not here?
Yes.
Well, me? Oh,
I'm just going to say yes. No, honestly, I think
Ken from HR is my new best friend.
Oh, yeah, best friend or holding your hand until. No, honestly, I think this is a huge election, especially because of what you're talking about, the quality of life taking precedence over any politics.
Lisa Abramowitz, Tom Keene, Jonathan Ferro, your equity market up 4. We advance a tenth of 1%.
There. Should we ever back?
42.40.
Yeah.
Not a first rodeo, Tom. From New York City this morning, good morning. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From New York City for our audience worldwide, this is Bloomberg Surveillance, and here's the price action this Wednesday morning. Equity futures building on the gains of the last couple of days. On the S&P 500 advancing about 0.1%. On the Nasdaq up by another 0.15%. If we switch up the board and get to the bond market, shout out to Matt Miller, who talked about the Treasury market on a round trip. We opened up Wednesday morning before that Fed decision at 149.39. Right now, your 10-year 147.17, just a couple of basis points away. A round trip, the price is the same, but the positioning has changed. It's cleaner. A lot of damage done to sentiment, to the shorts around treasuries. And for that reason, the likes of Priya Misra of TD looking to re-enter and reset for the steepener. Right now, your 10-year yield up by about a basis point, your 30-year up by a couple of basis points, and your 2-year advances as well to 0.25%. That's the bond market. I'll finish on the commodity market just briefly. WTI and Brent. A break is 75 again, 75.35, up 0.7%. Taking another bite out of stockpiles stateside, Tom. WTI crude, 73.27, up by about 0.6%.
Trend's extraordinary. From 60, I did the plot today, John, from $60 a barrel. It's linear, and there's just no end in sight. There's been a number of essays that just show a real persistency there ever higher.
The gains are there, and we caught up with Francisco Blanche of Bank of America, who teed up the idea, just this concept that maybe these numbers right here have an extra digit, triple-digit crude maybe, by next year, Tom.
Yeah, I mean, it's there, $100 a barrel, and, you know, we'll go with that. $110 was roughly the average any number of years ago, and we'll see from there. I should point out Mr. Blanche looks for supply to come in, and after a year or two of $100 a barrel, we pull back to $65 a barrel. That is of note to China. And for you to get into your summer reading, it is definitive because it is wildly eclectic and controversial. That is a new edition of Foreign Affairs magazine. It is Can China Keep Rising? Dan Kurzweil with his expertise on China, and George Marshall of Another Time and Place is with us this morning with an absolute tour de force. I picked up the magazine, and I'm like everybody else. I read the commercials, the advertisements, Dan, and then I go to the table of contents, and this is wildly eclectic. I want you to inform our audience about the adversarial environment of Wang Zhizhu. Who is he?
Tom, good to see you. Wang Zhizhu is this really fascinating figure. He's one of the people in China, one of the most respected analysts of the world of international politics in China. And he has for a long time been one of the most prominent Chinese advocates of a cooperative U.S.-China relationship. And so what we asked him to do, as someone who's been really supportive of cooperation between the United States and China historically, was to tell us from China's perspective, how does this deterioration in the relationship between the two countries, between the two superpowers, look from Beijing's perspective? We in the United States and in Europe know exactly what we see leaders in Beijing, especially under Xi Jinping, doing that looks menacing to us.